He will not leave you or forsake you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light.
Yo, good morning, everybody. Hope you guys had a good week or having a good weekend. Man, did y'all see what happened to McGregor yesterday? Yo, man, I knew it probably wasn't gonna be right. You can't take 5 years off. What a mess. But hey, it's kind of the way the cookie crumbles, right? If you start getting hurt, you can only recover so much. You know, we're all human beings. But that was unfortunate. But we'll see what happens. We'll see what happens. Luckily, I didn't bet on anything. I have a lot of friends that bet on it and lost. It's the way it is. Can't be mad. You are gambling at the end of the day. So, gonna have to get over it. But yeah, so again, hopefully you guys had a good week. We have a lot to discuss today. Can you guys let me know in the chat if you guys can hear the music playing in the background? If it's too loud, how does everything look? How do I sound? Can you hear me okay? Just give me a 1 in the chat if everything is all good before we get started, right? Good morning, Z. So yeah, if y'all could just do that for me, I would really appreciate it. Later on, we'll be able to also go over like crypto or whatever. I'm willing to stick around. I know I've said that a couple of times, and then we just quickly look at things. But once we get through everything I'm going to talk about today, which is going to be all this, okay, as always, then we can try to dig into some other extra things. We could talk about crypto. We could talk about, you know, whatever you guys want, because we're just as effective there as well. I mean, if you trade other commodities too, like cocoa and all that, I heard cocoa is rapidly increasing for whatever reason. That kind of sucks because I have a supplement that I use that's cocoa, like high flavanol cocoa. So we'll see what the price looks like with that. Hopefully they have enough to not hike the price, right? But we'll see. Those markets are really, really fun too. If you just sit there and watch them, a lot of times things like I think it was the grain market, wheat market, a lot of times that stuff has Bitcoin like rallies like more often than Bitcoin does. People freak out about Bitcoin and crypto as if it's like the only thing that has crazy runs, and it's like, clearly you haven't been here that long in this industry, because this stuff happens in many assets, right? Good morning, Fritz. Again, appreciate y'all hopping on today. Anyone that's new, welcome. Every Sunday, we go through this list of things, which is basically us just, or me just laying out the process I use to be able to determine what the weekly bias is going to be. Okay, what the hell just happened to the music? So this whole process is our weekly prep call, weekly Sunday, I guess, anticipation call. We go over all these different assets, talk about a bunch of different things. I answer questions. So if you're new, right, and you're a trader that's just trying to get your footing, and you want to have an organized process by a community that proves every single week the efficacy of what it is that we do, um, I think this is a good place for you. But yeah, thank you guys for hopping on, and we're going to get into it. Do you guys have any questions before we get started? Yeah, that's a good way to look at it, Tony. It's like a formal education type thing. Like we'll go through live trading. That's another thing. We're gonna be live all week. Okay, I've been doing this once a month, where I go live every day, show you guys what we do in my private group, and show you guys here on YouTube just how consistent this stuff is. It's not just 2 days a week. It's not just, a couple times a month. Like we're able to go into the chart and find something every single day, literally. Not that I trade every day, like engage. Like if I hit my goals, I'm pretty much done. Which is anywhere from 2 to 4% in a week. If I can hit that, I'm done. If I go over it, great. If I can't hit it, great. It doesn't matter because we're able to make it back later on. But we find something every single day, and what I share with you guys here on these calls, over on the live calls on or on like Tuesdays or any other live trading call that we do, I'm trying to get you guys to understand how to identify things on a daily basis. What we do today is a more macro perspective, right? So it's going to get you guys familiar if you haven't been here before, or have been here a little while. Um, it's really just to outline an organized process. You could take literally this outline and make it your own, okay? And then I show you guys the application of it, so then you guys can see how to put this stuff into practice. Because a lot of questions are answered as far as what price is going to do in the next week by the things that we do here. And again, we have multiple assets that we look at. A majority of the assets do what it is that we outline. And if that's the case, then the main thing that we look at, well, for me, it's indices. But you could be a currency trader, you could be a commodities trader. I don't really get into too many commodities. We can, if I have anyone here that, or later on, that's a straight commodity trader, because we do that too, right? If we choose to. But you really want to have your one asset class that you like, and understand all the different influences that affect that one market. And that's why having one market is so effective, because you really only need one, because there's many things that you can build behind that one asset, right? That one, perspective around a specific asset class. There's many things that help you go deep, from seasonality to intermarket relationships. So you don't want to stretch yourself too thin. Later on, when you get more comfortable, obviously, you're able to add other things. Like if the indices are going slow, like in consolidation, which is something we're going to discuss later, because that's what the Nasdaq's doing right now. It's stuck in a range still. Big moves inside that range because of all the geopolitics, but later on, if you want to add like the currencies, or crypto, right, whatever you want to do, you can add that, whatever it is. It doesn't matter, because I'm teaching you to read price. I'm not teaching you to read the Nasdaq, although we focus on that. But I'm teaching you to read price, so then you can go ahead and be versatile. Whether you want to be a long-term trader, a short-term trader, a day trader, a scalper, or a mixture of a couple of them, you can do so, right? With any asset, because price is price. What I talk about on the bonds, on the yields, on dollar, on the NASDAQ, all these things are universal. So you're able to use them, like the tactics on any asset, including crypto, and any other thing that has a price chart, really, because it is what it is. And you can go in and prove that to yourself. You don't got to take my word for anything, but you'll see that this is the fact, right? So any asset that we spend time on, there's something to learn because it's price, right? Price is price, no matter what asset, as long as it's a candlestick chart or an open, high, low, close bar, right? Whatever you're using, price is price. So just keep that in mind. Yo, what's up, Harley? Harley is a damn superstar. So if y'all want to go follow another absolutely spectacular content creator and trader, go follow. I can't even say he's my student no more because he's not really a student. He's his own trader, and I'm proud of you, Harley, by the way. I like to tell you that all the time, of course. Just in case you forget, right? You're spectacular, bro. Along with many of you guys in my private group that are getting to that point. So yeah, good morning, Jen. If I didn't tell you good morning, good morning, everybody. So yeah, with that out of the way, let's actually get started. So when we look at the news events this week, we have no news on Sunday, no news on Monday. Sunday and Monday, I don't necessarily like to really trade anyway. If I do trade on Monday or Friday, it's generally half risk, especially if we have NFP, CPI, rate announcements, which are coming soon, by the way. The rate announcement, whether they're going to hike rates or keep them the same. What's the expectation? Okay, they're going to maybe look to keep it the same. Possibly. The talk about a hike in rates, again, we got to keep real close attention to that. Because if they hike rates, that's bad for the stock market. That's bad for business anyway, right? Because they're not going to be able to borrow money properly. And we'll talk about the asset that is directly affected by the rate announcements, whether it's a cut or a hike, which is the yields, right? But we'll get into that in a second. So CPI is a one-stage news event. Generally, a lot of times when it rips, it's going to keep going in that direction. Sometimes it rips and then comes back to close in the dramatic inefficiency that it leaves. So you want to keep that in mind. If you're going to trade any of these heavy red folder news events like Fed chair speech, CPI, NFP, FOMC, rate announcements, FOMC, NFP, rate announcements, Fed speeches. Am I forgetting any of them? Let me know in the chat if you guys catch me forgetting one. For the most part, those are the main prohibited news events. You could still trade them, but if you're going to, you got to trade them at least 45 minutes, 30 to 45 minutes after. And you got to aim at the liquidity mapping list that I give you guys and see which one of those liquidity pools are available. And just for completeness sake, for those that may be new, I want to go ahead and highlight what that is. What do I mean by liquidity mapping? Whoops. So whenever you're looking at liquidity, higher time frame wise or lower time frame wise, here's a list right here that you can take a screenshot of. This is something that happens every single week, every day. Whatever liquidity pool is here, it's either going to act as, or whatever from this list that's present in the chart, one or a couple of them are going to be used as counterparty liquidity, basically the losing side of the trade. Like if you're going short, right? Buy side may be encapsulated by London's high. So, you can get even more precise with like hourly highs, 4-hour highs, so on and so forth. But this is a good starting perspective here, because again, you'll see that one or more of these are used every single day for both counterparty and target, because there's going to be counterparty that's part of the manipulation. So if we're going higher to go lower, you could think power 3 as well, but that manipulation portion could be coupled with a level that you see here. Okay. And then once it tags it and then rejects, you can use another one of these, if you know, whichever one is present on the chart at that time for the asset you're trading. You can use the other one as counterparty. A lot of times there's a combination you'll notice over time. Like, for example, my favorite is seeing either previous day and previous day and London high, which is, of course, session highs, being swept for a bearish power three. So then we can target previous day's low, previous week's low, or some inefficiency down below price for the bearish power three. The same is true when you go the opposite way. So you want to think of liquidity from the lens of counterparty and profit taking, right? If you take an entry at buy side liquidity, right? Say the 2022 model forms after a stop run on previous day's high or London's high or even Asia's high. Do I have Asia's high mentioned here? I do not. That's kind of strange. Am I tripping? Yeah, no, I don't have it. I guess I figured that session highs is kind of self-explanatory. I'm gonna have to add that to this. I don't know why I didn't put it. But yeah, anyway, right? So session highs, hourly highs, 4-hour highs, and lows, right? Higher time frame PD arrays, previous day, week, month highs, quarterly highs and lows. All those things are significant everyday liquidity pools. Maybe not so much the monthly highs and lows, but or in the quarterly highs and lows as well. But that's more of a macro target, so it takes a while to get there, but they're still significant. They still can set you up with, say, a quarterly shift. If you see a previous quarter's high swept going into the next quarter, and we see an aggressive rejection, and on that quarterly chart or the 3-month chart, we're hitting a bearish order block, and the reverse is true for, say, the dollar, and say the asset we're looking at is the indices, you can get in front of quarterly shifts near the first beginning stages of a quarter. If you see also SMT, maybe at the highs, and again, dollar going potentially higher, maybe there's bullish SMT between the currencies and the dollar. So there's lots of things that you can do from this list, right? Lots of perspectives you can have, and a lot of scenarios that if you go in and study these levels and think from the lens of counterparty and target, you'll be pleasantly surprised at what you discover. So I talk about this all the time. This is our liquidity mapping idea. These are all significant levels that you can identify every day, and you'll always have a trade setup, right? You'll have a duo of liquidity based on like a high and a low, very particular highs and lows. And then you could frame your trade setups around them again every day. This is part of how I'm able to find a setup every day live with everybody. Again, doesn't mean I take the trade, because there could be other factors that make me a little bit uneasy. Maybe we're in consolidation. Maybe, there's lots of geopolitical stuff happening that may be a risk that's not letting price move. Maybe there's a crack in correlation, right? So I may call a setup, I may see a setup, and it may work out. But you either have rules or you don't, right? And if your rules are not in alignment, you need to practice not touching the price action. And if you're coming from a place of like, I need to make money, I need to make it today, like this is going too slow, you're not going to be able to have this perspective. And it's going to ultimately result in ruin. Last week made a big move during London Thursday. Yeah. In my private group, we saw it live. And there was also another thing when Trump, I think, mentioned something about the Iran war. He's like, it's not over. We're going to keep going. Right when he sent out that tweet, heck of people thought that it was going to go higher, right? Lots of live streamers were live. We had a profitable day that day. Some also had a profitable day too that, had that price action go against them, which we'll look at in a second. But there was a huge decline that was fake, right? It was all manipulation to get down below London's low. And then what did it do? Ran up to seek London's high, or at least attempt to do so. So it's just a good example of the risk, but also, again, order pairing and liquidity. And if you're not anchored in the higher time frames, I'm sure that many people got ruined. Yeah, I saw a lot of streamers getting wrecked. They're like, what's happening? Oh my God, I'm so shocked. It's like, okay. Shouldn't be shocked. It's the way it is. Yeah, no, 100%. I mean, they all do that. You know what I mean? They all do insider trading. That's why none of them go to jail. That's why it's never going to stop. And that's another reason why the markets will probably never disappear, right? Because it's too valuable to everybody. Not only them, but also the whole world that invests in the US markets. So again, just another reason to not worry about them taking this away from us. We're going to, again, by December, start to see the 24/5 idea. Okay. So that's something that we're going to be paying close attention to as well. So yeah. With that being said, again, if you haven't screenshotted this, you very well should. Um, it's very important. You could take this as a helpful resource to go in and study as well, and then start to really define the liquidity pools that you like the most. And you can even make it so, that's a part of your trading plan. Like I will only take a short, for example, if London's high is taken. And once that happens, if I have a previous day's low available, that's going to be my target. I want to catch setups around that at a particular time on a particular part of the week, maybe even at a particular time of the month. Because again, the middle 2 months are the best, or the middle 2 weeks in the month are the best because there's a monthly power 3, right? Same thing with the quarters, right? For the year, the 2 middle quarters are generally some of the best trading throughout the year. And the first quarter and the fourth quarter are generally a little chaotic, right? Doesn't mean there's not setups, but this is a perspective you can have. Okay. So yeah, with that being said, again, make sure you screenshot that. But we will go ahead and look at some of the extra news. So before we even move forward further, Sunday, Monday, again, we think of every week from the lens of power 3. So Sunday and Monday, accumulation manipulation, generally. Sometimes that bleeds over into Tuesday as it looks to set the high or the low of the week. And then Tuesday, Wednesday can be expected, if it's going to be a trending week, to be the expansion phase. Once we come off the heels of that and we hit Thursday and Friday, depending on which day hits either a liquidity pool, like one of the things from the list, from that higher time frame, or if it hits a PD array that's opposed to what this expansion was, you could then expect that Thursday and Friday, depending on which day fulfills that, is going to end up setting up a potential run back inside the weekly range, or to cap the weekly range, presenting us with either the down wick for the week if you're bearish, or the up wick if you're bullish, okay, for the weekly candle. So a lot of times Sunday and Monday will be the time that sets up one of the wicks, and then Thursday, Friday, right, could set up the opposite end of the weekly wick, okay? So yeah, then we have Wednesday. Of course, we got PPI. It's going to be interesting. It's what's going to determine whether the rest of the week is going to be even worth considering is how aggressive CPI becomes. If it runs like 500 to 1,000 plus points because of CPI, a day after a large range day is a problem, right? It leads to slow movement because, again, large ranges lead to small ranges. So you got to keep that stuff in mind. Okay. Does it always happen? No. Does it happen more often than not? Yeah. If you go back and look at some of the biggest moves, generally the day after, maybe even the next couple days after, if it was a really aggressive move, like I said, that goes over 1,000 points and whatnot, it could lead you to harder to trade conditions. Does that mean you go in being fearful and expecting the worst case scenario? No. You go in there expecting that, okay, if there's a chance for it to give a retracement, maybe that's going to be the best thing to do. Aiming for whatever internal range liquidity was left after the expansion. And then if it can't do a deep retracement and we just start ripping again, you got to identify what it's reaching for on that weekly chart or on the daily chart, right? On the higher time frame specifically. Because if it hasn't fulfilled something on that higher time frame chart and we had a big displacement, it's more likely that it's going to probably look to continue to finish that off. Sometimes they stutter right before, but it's kind of conditional, situational, I guess you could say. But it's a good mindset to have. Okay. So yeah, with that being said, that is our news. So we'll see what happens. Tuesday, Wednesday, Thursday are going to be the most dynamic price delivery, I'm assuming. But it really depends on what CPI does. PPI is pretty vicious as well. So, these 2 days are going to be pretty interesting. CPI, we'll see if it's even engageable or not. But if it's not, then we could look at PPI maybe even Thursday or Friday, depending on what happens. Okay. So again, always look at the news and think power three. Always, every single week. It's non-negotiable, because power three is literally the market, and inside that power three understanding, you answer pretty much every question possible, from PD arrays that are important to where price is going to reach for, how to trade every single day. Not that you should, but every concept that ICT talks about can be encapsulated inside Power 3. Same thing's true with market maker models. Market maker models work within Power 3 as well. Think about it: accumulation, manipulation, distribution. So if we accumulate and then run higher just to go lower, that run higher is the buy side of the curve. It's part of the manipulation if we're bearish. And then once it sells off and distributes, when it targets the lower portion of that initial accumulation from the Power 3 idea, that's the terminus, right, for the overall market maker sell model if we're going bearish. So you can merge these two concepts together, right, which I can actually go in and show you guys. I talked about it before, but very important. Okay, so don't forget. So that's the news. So let's jump over here to the assets we're going to observe today. So starting with the bonds and yields, as always, right? This is the bond market. We've been talking about how this could have ran higher a little bit, but if it's going to stay bearish, right? We obviously have this outline that's been there. We do have buy side and then sell side delivery. Let's actually move up a little bit. A little bit more of a clear picture from the larger view. Let me make this bigger. Actually move to the monthly chart just to get a feel for some of the levels, right? Like in particular, whenever you look at any time frame, you want to look at the current high and low, previous highs and lows that are in close proximity. Okay, so this is a close proximity previous weeks or previous months low. So price is going to reach for these deeper targets eventually and continue to be bearish for the bonds, which again, this has a positive correlation or influence on the foreign currencies and the indices. So that's why we use it. That's why we spend a lot of time on it. Because once you have this understood, when you go to the indices, if there's something that can support what's happening in the bonds and say the yields are doing the opposite, that's market symmetry. And the first rule of high probability is market symmetry. Okay. So yeah, when we take a look at this chart, we have an order block that's being respected. We do got relative equal highs up here. We do have, is that equal lows? No, so it already took out those lows. We were actually calling, I remember, for it to go lower into this. It respected the bearish order block here on the monthly chart. And now we could see that we're still respecting this bearish order block. So once it gets below this wick, well, I mean, just in this area, we have this wick. So that's one PD array. We have the high here, and then we have the order block. And is there anything else? I'm sure we have a bunch of new week opening gaps in here as well. But as long as it stays below this high, preferably below the midpoint or the lower 25% of this bearish candle, price is going to look to continue to drop potentially. If that's the case, we're having continued downside interest for the indices and the foreign currencies. So unless that changes, which it very well could, given all the things that are coming out, like the rate announcements and whatnot. We have CPI coming, so I mean, that could have a pretty heavy impact. So we got to make sure that we're keeping these things in mind. But overall, technically, when we're looking at the chart, we have a low, up to this high. So we have sell side, buy side, sell side again that's took stops. Okay. So this buy side delivery up here, from that low up to that high, if it's going to be bearish, we need to see this continue to support the lower 25%, lower 50% max, because this is a BPR. Now, if we were to get up above this, again, we have equilibrium as well. That's then being violated, along with the wick, the order block levels, and then the swing high in itself. So if this gets taken out, again, is there really a reason to force sells? If this was the NASDAQ and it looked just like this, would there be a reason to force sells if we got up here? I wouldn't think so. Especially after a stop run. Especially if, dollar declines and this does end up getting up above this high. That'll most likely be also seen in the yield market, which again is this market. Okay. And that the yields impacts the dollar. This impacts the foreign currencies and the indices. Okay, so again, as long as we stay below this order block here, if we can, do we have a closure below that wick midpoint yet? Well, we're not going to have a closure until the end of the month, but getting below this wick here, this is a good thing for me to point out for you guys when you're looking at price action in itself, as you're managing a trade. If you see this retracement in here, right, maybe this wick kind of scared you, right? And maybe you hesitated on this entry because of that wick, right? For whatever reason, okay? When you have the midpoint of a wick like this, the best possible thing you can see happen is obviously displacement through it, because displacement through it, this level is presented as a balanced price range, right? That displacement confirms that this wick is something to truly hold on to as a bearish overall PD array. So wick followed by displacement is a PD array in itself. That's a version of a balanced price range. Okay, so we'd have this balanced price range plus the order block here. That's a balanced price range, but you can encapsulate this low to that high. If you get that coupled with respect to the midpoint here, or disrespect to the midpoint by us displacing through it and closing below it, that's one thing to look at that helps confirm that this is going to keep going lower off this move. But when you get a displacement through that low, that is a barn burner signal the price is going to keep going lower. And then once you get price to get down below that, this becomes the PD array you don't want to see get violated, right? So any retracement that happens once we get below this low needs to stay in the lower 50, lower 25%. It's that same way when it comes to every PD array. All right. When you're looking at them, the best thing you can do, or best thing you can see if you're bearish, is price respecting PD arrays that form up to the midpoint, preferably the lower 25%, or not even coming back to them at all. Right. That's a huge tell that price is going to keep going in your direction. In this case, if we were bearish. Okay. So we talk about this all the time, but hopefully maybe if you guys are new or haven't really thought of it in this way, hopefully that is pretty powerful for you, because again, in all price swings, you're able to see these things take place, right? It's just a market truism. It's the way it is. And you can fight it if you want, but you're going to be funding my trades. So, and anyone else that understands this. So yeah, and if of course this doesn't respect and it again breaks this high, we have now broken 3 PD arrays. That's our validation tactic. If it breaks 3 PD arrays, the next thing that's going to get broken is you, per ICT's advice and things that he's taught. It's a very simplistic way if you're in a trade to manage your trade. Is this really worth holding? Should I be continuing to hold this trade? Well, look around your entry. Are there 3 PD arrays being respected? Or are they being violated? Because if they are, you might as well get out. If not, you have no reason to really worry. If we're respecting what I just talked about, the lower 25%, we get displacement, we get a closure below this, maybe a shallow retracement that just keeps staying in that lower 50% of the previous ranges that are created, right? Like once this breaks this low here, you can also measure this out too from the high here down to that low. Midpoint of that is also part of equilibrium, right? For the current overall price delivery you're trading in. Okay. So if this stuff is intact, there's no reason to get out of a trade, right? You have no reason. You should be thinking when you're in a trade, not is my stop going to be taken? Oh my gosh, it's going to happen to me again. Like, don't think these negative things. Even if you're on like a 10 losing streak, a 10 trade losing streak, right? You want to stay positive. You want to make sure you're thinking, okay, well, what PD arrays are in price and what is continuing to support my idea? I mean, you can consider what may turn off your idea. I mean, you always want to have that. And you can keep it simple. Are 3 PD arrays being violated? And again, it's as simple as that, really. Let me see. Yeah, Fritz, I agree. That implied FVG had respect. Mercy with the wick with the bullish candle on the monthly. If I remember implied. I'm assuming you're talking about this here. It's kind of a sloppy one, but when there's a wick, preferably this candle is lower, right? We have a wick with a candle in the middle and then an overlapping of that wick here. It's kind of sloppy. It's not even necessarily something that would be too concerned about when it looks like this. It's a little too sloppy. You could just simply use the wick here. I mean, I guess it is somewhat respecting it. The wick right there. You want this lower part of the wick, or this wick that's lower than this one that was initially created. Generally you want it to be a little bit lower. But you have the midpoint of this wick and the midpoint of that wick, right? Generally, we don't want this candle's body to be in the midst of this wick, right? The wick here is the only thing that you want if you're looking at the implied fair value gap, which is, again, something like this. For those of you that don't know what we're talking about. Right, the implied fair value gap is something like this here. Shit. It's having like something like this. Okay, so there's a wick and then a candle in the middle and then a wick that overlaps it. What you do is you take the 50%. I'll just eyeball it real quick. You take the 50% of one and then the 50% of the other. Okay. And that becomes a little range. So what your expectation would be for the next candles would be something like this. You'd want to see it respect that level, at least on a body closure basis, right? It's one of those hidden PD arrays. If you don't like that, though, you could just simply use the biggest wick in that area. And then that could be something valuable because that stuff will be referred to as well. But that's the implied fair value gap for those that don't know. Per ICT's teachings, right? They highlight what looks to me like implied fair value gap. Looks on your monthly order block lines. Which ones? There's a lot of lines in here. I'm assuming that's the one you were referring to. But yeah, so again, there's really not much more to talk about in terms of this time frame. But again, every time you start an analysis, you're looking at the current high and low, the current monthly high and low, previous, and anything that's in close proximity to it. Right? So this is the first liquidity pool that has to be taken. This is why this is significant and an important perspective to have for liquidity, because many people are pretty much looking for something like this, looking for something like this, like what's the extreme? They don't realize that, especially when you're on these higher time frame charts, you could literally use the current low and current high of the current candle, because that is significant. That's liquidity. When the next monthly candle opens up, right, we're probably not going to stay here. So it's probably going to be a different close, a different low. But the idea still remains, right? if this was a closed candle, like for example, this one, we may think it's going to target this wick or that wick or any other PD array down below. But when this candle opens up, the next candle, we're inside of this previous range. Okay. So no matter what it wants to do, if it wants to go higher and target this, right, relatively equal highs, maybe you come back to the order block, or maybe it wants to come back lower and target these lows. No matter what it is going to do, in order for this price to get there, it's going to have to get through this candle's range first. So doesn't it make sense to identify that low and that high if that's the case? And because this is a larger perspective, you're able to frame setups, multiple setups, many times towards these different levels. Okay. So yeah, and this is the same thing is true, right, across the different assets. So very easy way to look at liquidity. But again, I think that this is going to target this low. But before we get there, right, we're going to have to break the quadrants. These quadrants on this wick, anytime price is trading down or up into them, those are all targets as well. Gaps are used, or fair value gaps and wicks are used in a very similar manner. Wicks are classified as gaps per ICT's advice. Okay, so you treat them as such, right? Just like how we would like to see quadrants in a fair value gap get used, it's used in a similar way, pretty much exactly the same when it comes to wicks and price. They're highly, highly effective, highly helpful, and you need to be looking at them if you're not. Because again, if you have a wick and a displacement through that, that level is most likely not even going to need to be traded fully into, right? And if it does get traded into, like say it breaks this low, you want to look at the lower half, lower 25%. Preferably, it doesn't come back to it at all. Okay? So again, that's a constant. So I do have this order block. I'm actually going to take that off. It's too busy. So if we take our monthly perspective, which again, we got our levels here. It's our previous monthly low. Right? So we'll keep that in the crosshairs. So we'll go from this, keeping our validation level in mind, or invalidation, I should say. As long as it stays below that, we'll keep going lower from this monthly chart. And now we go to the weekly chart, and we could see prices retraced. We hit that monthly bearish order block. People that saw this rally probably thought, oh my gosh, it's bullish, blah, blah, blah. It's probably topping out. We took stops, it's going up. In order for us to, from our perspective, agree with that, again, we need that monthly chart to show us that the trend's over. Okay. Aside from that, though, to anticipate that that was going to happen, this should have left a bullish order block that then gets traded through, because in that case, if it left that and broke this high here, right, we have this change in state of delivery. So one order block. Okay. And then we would have had our secondary order block, or double change in state of delivery. Right? Whoops. The wrong one. So if we would have had two changes in state and price respects this lower level, we then start to see this as a balanced price range and a turning point for price to then go higher. Right? So if you're not sure about a narrative and you're coming off of, say, a low, and something like this happens, if you're not confident yet because maybe the monthly chart hasn't got to a level that allows you to trust that this is a turning point, you can just simply observe the double change in state of delivery. This is a highly effective tactic. If you guys have heard me talk about this, but haven't went in and did research on this, you really should. Maybe you didn't trust that this was a drop that was going to keep going for whatever reason. Okay. The double change in state of delivery is here. Right? It's an early sign. Full change in state, full double change is down there. Okay. I got really bad allergies today. It's really irritating. But yeah, I hope that makes sense. Okay. And again, this is a universal topic. This helps you with bias and narrative. This helps you know when a turning point is actually going to turn on the lower time frame all the way up to the higher time frame relative to whatever time frame you're looking at. Right? And models can be formed around things like this. Okay? So again, where we're at currently, this looks like we may be setting up a further market maker sell model to keep going lower and target this. We are below this previous accumulation here, or bullish order block. We broke through it aggressively. It didn't just wick through it and close back above it. So if this is violated, if we continue to run and we break the midpoint of this order block here, then we're most likely going to see that this high is going to be taken and then this high will be taken. And again, going back to that monthly perspective, if we do get above this high, we know that the trend has now shifted and we're going to now go higher. Longer term. And then you can hold that bias or narrative, because bias changes on a day-to-day basis a lot of times, but the narrative overall changes from this view. Because again, that is a 3 PDA violation to the upside when price has been going lower from that higher time frame. And because it's a higher time frame, because this is a tactic being applied to such a macro view, you can expect that if that is happening in price, it's going to go the other way for quite a while. Maybe a week, maybe 2 weeks, maybe even entirely change the trend overall. Right? So yeah, with that being said, this will be our line in the sand, even from this weekly chart. The early signs are us seeing this get violated, because again, this low, high, lower low, that should be treated as a bearish breaker. Or the accumulation turned distribution in this market maker sell model. Right, so you can now see the picture a little bit more clearly here. So yeah, I'd say that as long as we stay below this, that'll be good. Early signs when we're looking at this daily chart, the price may look to turn and reach for these upper levels is going to be if we simply get outside of this. I mean, if it rapidly closes below the midpoint from this high to that low, right? So this here should act as a BPR that gets inverted. It was a balanced price range when it took stops, rallied up and came back, right? We have accumulation, manipulation, distribution, rebalance, and then redistribution. All of that was used to just simply reach into this monthly bearish order block for the monthly turnaround. Right? A lot of people could get fooled by things like this when they're not using these higher time frames. So that's why the higher time frames are so important. If you don't care about the macro perspective, again, you're leaving clarity on the table, or tools that can help you be a little bit more clear in terms of what it is that price is going to do for a longer period of time. Your narrative is not going to change every day. Your bias might, but the narrative overall, what's happening from that macro perspective, what direction we're truly going in, a lot of times that's going to stay relevant for a long time. And it takes a lot of price delivery, an aggressive move that looks pretty insane on the lower time frame to then upset whatever it is that we determined on that higher time frame. Okay? One thing you can notice as well, if you take this high down to that low, this was a market maker buy model. If you break it down a little bit further, you could see that this here was also a market maker buy model. You could see the respect to that previous bearish order block. So accumulation turned distribution to the upside. Simply to get, again, into that monthly bearish order block. And then once it tagged it, we then shift market structure again, change state of delivery again, And now we're in line to see our secondary change in state relative to this daily chart. Once price closes below this, in this case, we don't necessarily need that. We already have enough to determine that this is going to keep going lower, unless, of course, we end up displacing aggressively and get outside of this yellow box. And then eventually, from the weekly perspective, above this weekly bearish order block. And then once we break this high up here, that's the monthly overall shift as well, breaking 3 PD arrays from that monthly perspective. So you can see that we have a long way to go to get away from the bearishness that's happening in the bond market on a macro perspective. But again, a lot of people wonder how I'm able to be correct so long term, right? How am I able to pick the lows of the year, the last 2 years? How am I able to determine almost what every quarter is going to do at a pretty high rate, right? If you go back and look at all the different videos, if you count how many times I was correct, we're in the high 80, low 90% for where price is going to go. And again, you can go get this data by looking at what's said every week, keeping a log of it, and then seeing how often it works out over a specific time horizon. And you can get that percentage. Again, I have that percentage. It's high 80s and the low 90%, depending on what year we're calculating. Last year, it was specifically 86%. This year, we're in low 90s, right? 91% exactly, but for part of the year, we were at 88%. But the fact that we've been correct so much recently, I mean, it's nuts. It's freaking nuts. And again, you can go get that data. You can kind of put 2 and 2 together every week. So yeah, again, as long as this thing stays below this, we'll keep going lower. Target down here. So that's going to be my objective, my perspective. We came up, tagged this volume imbalance, and price has now respected it. So there's nothing in here telling us that this is not going to go lower. We took out lows here, so sell side's been engaged. I did kind of want to see a little bit deeper of a retracement, but it's even better if we're going to continue to be bearish. The price stays in the lower area right there. For its like quarterly look, yeah, no worries. We'll take a peek real quick. Yeah, I mean, you could see that it's pretty much supporting the monthly, weekly, daily perspective. I do see this low. Do I already have that marked? No. So that's our quarterly low. I'm not necessarily going to be too concerned about that, to be honest, because it's so far away. What I do like, though, is this here. A lot can obviously happen with all the geopolitics and whatnot to a quarterly perspective, and it takes so long to get to the levels. But we have a general sense of what it looks like here. I mean, you could look at this order block here. Look at how nicely it respected the midpoint, right? We closed inside of the order block, right? We basically rallied up into this one. But once it continued to drop, we have this wick in here, which we talked about early in the year. We got this bearish order block. We have a rejection block here. It was respected for a second, right? It was having a hard time. You could see the rejection and body closure showing respect to this level. You could see the consequent encroachment of this wick. The upper 25% was being respected a little bit, right? Maybe gave people some pause to basically anticipate whether it was going to hold or not. But now we have this wick here. Price traded up into it. It's below the midpoint of the order block. Price respected it. Then we traded up. Couldn't even get to the midpoint of this wick. And then we displaced. Then we rallied up again. We ran a little bit beyond this wick, but again, we stayed in that lower 25% of this previous. And the body closures closed well below all these wicks and below the midpoint of this order block. So again, the overall perspective for this price delivery in this current moment right here was that price is going to either stay consolidated or this was going to lead to a meltdown. And we see that it has melted down on a quarterly basis. So I don't necessarily think that that's going to change unless something changes. We do have the failure swing here now. So that's a built up liquidity. It did take this one, but again, this is the most current one and the major low. Okay, so that is a failure swing. And then again, we have the lows here. So we'll see if we can't continue to go through that. Now, from this quarterly perspective, if we think of what we did, so on the month, on the monthly perspective. Okay, for this quarterly perspective to change, first of all, we need all the lower time frames to support it. But then again, you have to think about the repeat arrays, right? We have gaps in here. We have a wick. And then we got the midpoint of this order block and this high up here. So this high up here, for the quarterly perspective, would give us a long-term quarterly basis, maybe even the yearly basis. The price is going to end up trying to now go higher rather than look to target the lows. Again, with a rate hike, that's negative for this. This is going to decline, which is why the stock market declines as well when there's a increase in rates, right? Not only rallies the yields, but it's reverse correlated, right? Whatever the Fed chooses to do with the interest rates, it's reverse correlated with this, okay? So yeah, with that being said, right now that we looked at pretty much every higher time frame we want to look at, got a feel for every single time frame supporting this going lower. I'm pretty confident that we're going to see this continue to drop. So if I was trading this asset, or if this was the NASDAQ or any other asset, and it looked like this, I'd be thinking the same stuff. Yeah, that's another good thing to point out for its SMT. So when we look at the larger perspective in here, we could see, is there SMT there? No, it hasn't quite broken through the low there, so I wouldn't necessarily say that that's SMT. I mean, maybe, yeah, I mean, we can see a little one. I don't think that's going to be too significant, though, unless we get a change in state of delivery. The underpinning is higher time frame bearish. There's more stuff supporting that this is going to be bearish. And if you think fundamentally, if we get a rate cut, that SMT is going to be very deceiving. Not every SMT is created equal. And when there's a lot of stuff going against that SMT, the SMT is just a pattern for pattern's sake. We need the deeper context to fully align. Right, I think we did have SMT here, which is what we talked about that led to this rally. Do we have SMT there? I remember when we talked about the SMT at the highs that led to the decline. Again, the sentiment is bearish. So any bullish SMT, you got to be it's very questionable unless, again, you get changes in state or other things that support the idea. So it's something you want to be careful with SMT. But that is there. The pattern is there, right? But yeah. So again, that's pretty much all I have for you guys for the bonds. So we'll see if that can continue. Again, if that continues, we'll see later on if the dollar and the indices also kind of support that. In this case, the dollar would have to be going higher. The currencies and the indices to support this idea should be going lower. Okay. So when we move to the yields, which is the opposite, we got this one correct as well. If you guys remember, I outlined this little piece of the inefficiency in there. Again, all you got to do is go back to last week and you could see, yet again, I was correct as far as where it's going to go. Okay, and this ran up aggressively towards that level. So we're above this high. That was a market maker buy model. Go to the weekly perspective. We have this wick up here that may be used as a target. I mean, I talked about the likelihood of this thing rallying once it broke these levels up here after the stop run. This had SMT at the lows as well. So this is supported by not only its own SMT, but also the bonds when they had SMT at their highs. So again, I really do believe, you know, we're also above this swing high here. So we now have a shift in market structure. We have a change in state that happened here. We have the momentum order block that we talk about, which is just a order blocked as a wick, where the next candle encloses the entire thing. It encapsulates the whole entire previous candle's body. Doesn't always have to overtake the wick. Preferably it does, though. But that is a balanced price range. And this is accumulation, manipulation, distribution. The return back into it, why that's significant, why it should hold, is because that should be the distribution, a redistribution. Okay, so whenever you see an order block in itself, you should be thinking power 3, right? Again, everything comes back to power 3. Everything can be encapsulated by market maker models, right? Like this here, right? We rallied up, created a bearish order block, right? Think about accumulation, manipulation, and then distribution. Once we break that and change state of delivery, when we come back into it, it's also a balanced price range. So we should be able to see that then redistribute. Same thing here, right? We have accumulation, manipulation, distribution. The next candle rebalanced. And then we got redelivery through to the buy side up there. Okay. So we could very easily see this being the case here, right? We got a small stutter candle, consecutive down candles. Price is now above that. We got a full change in state. Also a shift above this high. So as long as we stay above this high to that low, which again, go to that daily chart, was a market maker buy model, this should have that reverse correlation effect to the bonds. So if the bonds are going higher or the bonds are going lower, this should go higher. And we can see that pretty much unfolding in here. So I'm going to stick to that. I'm actually move this up. You know, that's the initial low for the whole range, but I like to use the most recent, most energetic price delivery to frame my ranges on. We are kind of consolidated in the 5 years, so that's somewhat of a problem. If the bonds and yields end up not really going anywhere and being stuck in a range, a lot of times that can be cause for concern for the indices and other assets. Because again, currencies of a country chase yield. And if the interest rate market is consolidated, which is making the dollar not really do anything too crazy, that's going to affect the assets that are affected by those two asset classes. So with that observation, you're able to then look at your asset of choice that's affected by those assets and lower your risk. You know for a fact it's a time where you should not be pushing. So, you know, the question of when to trade, when not to trade, when do I push, when do I not push? You know, this is part of the answer to that question. Okay. I get that question a lot. Like, how do I know when to trade, when not to trade? This is part of that process of observation. Does that make sense, you guys? Let me know in the chat. Just throw one in the chat if it makes sense. Appreciate the engagement, Fritz. Very enthusiastic today. I love it. Okay, cool. Tony, cool. All right. I'll take your guys' word for it. So, again, if everything remains the same, in anticipation of the rate hike, right, we may see this asset go higher. This is the asset that they're hiking in rates. I don't have a lot of opportunity to join. Oh, yeah, that makes sense, brother. No worries. Even if you just watch the replays and hit me up with questions, go to the timestamp right whenever you're watching like the replay. You can always reach out to me. You've been supporting me for a while, so I'm here to help. You've came a long way, by the way, Fritz. Many of you, Tony, like all of you, from when you first started hanging out with me. You know, some have went on to join the private group. I mean, you guys here on YouTube, I mean, you guys get so much value, let alone those of you in my private group who watch, and we go through this stuff every single day. I mean, stuff is literally priceless. I've been seeing a lot of you guys succeed recently, and it's just always amazing. It's never going to get old. Really never going to be old. Man, building my buffer on my first funded account. Damn, that's nuts. That's crazy, Fritz. I appreciate you saying that, Tony. I mean, when people stick around, they kind of, well, they 100% see what it is that we do here. It's absolutely insane. It's all been due to growth with WMG. Man, yeah, that's amazing. I appreciate you guys saying that. I'm happy for you guys, for sure. I'm curious to see where all of you guys are at in 5 years. You know, I think in long-term horizons most of the time. And then with you guys, I just can't even imagine. I can't even imagine what's going to happen, because you guys can take this as far as you want. You know, there's no limit to what it is that we do. And there's going to be no limit to what you do. And I'm just grateful I've been able to have a skill set that I can help you guys with and simply play a small role. You know, you say the growth has been due to me, but honestly, I'm just giving you information. You're the one that's putting in the time, right? You guys are the ones that put the effort behind it. I can teach theory all day long, and it may sound good, right? We may sound smart, or, you know, whatever people want to classify it as, but there's a difference from theory and action. When you put theory that actually works, that's actually credible stuff, you put it into action and you prove it to yourself, I mean, the value of what it is that you're learning becomes ridiculous. And even people in the ICT community, most of them are not able to have the level of precision and consistency and process that we have. They sound good, a lot of them. You know, their marketing is on point, but there's just really no comparison to what we do. And when you put it into action, you prove that point to yourself. I don't got to really be too flamboyant about it. Obviously, that would get more attention, but you know, eventually people will see the writing on the wall. Be 50 in 5 years. Oh, nice, Fritz. Be working for myself by then. That's awesome. Shoot, I hope so. I hope to hear that. Keep me updated with that. And you have a funded account. You're building a buffer. That's the exact perspective to have. Not, oh my gosh, I finally got a funded account after failing so much, or, you know, taking so much time to pass it. Let me hurry up and get a withdrawal. You take that withdrawal, you're putting yourself behind the 8 ball. If you don't put a buffer in, right? Like, it's mandatory. If you want long-term success through funded accounts, you need to get familiar and comfortable with building a buffer. Because if you make $2,000 and you automatically withdraw, right, like most of it or half of it, your risk is now cut. It's very small. So you want to get to a point where you have a big buffer. Like, say you have a 50K Tradify account, the instant funding, right? And you're already up to like 7,000. Well, if you take a withdrawal, you still have a huge buffer from that initial 3,000, right? Because if you have 5,000 and it moves up to like 7,000, or let's just say 5,000, your buffer will forever from that point be 53,000. You can grow it up to 100K, and everything from 100K total down to 53,000. So basically what? $47,000 in profit, if that was what we were going off of. Oh, wait. Yeah. If you take it to 100K, you'll have basically $47,000 to lose, as long as you don't break the max daily loss, which I think is like 1,200 for 50K. As long as you never lose that, you have that whole buffer. So you can lose multiple times as long as you don't break those rules. You're not going to withdraw and then be squeezed with how much your max loss is overall, because you just couldn't wait and let consistency build that bigger buffer, because you're in such a fever pitch to get that withdrawal. This is why people fail, right? There's a way to put the leverage in your direction when it comes to the funded accounts, which are created to make it so it's hard for you to even succeed at all, proven by the statistics. But there's a way to do it correctly as a professional. And unless you change that mindset, even if you need the money right now, right? The moment that you change the mindset to what I just mentioned, and you let your skill set build a buffer for you, it becomes a lot better, a lot less stressful, and longevity is afforded to you. It's not afforded to you if you're in a fever pitch to withdraw every dollar you make. We'd love to do that, obviously, but that puts you behind the eight ball. It's set up in that way for a reason, because these companies want that commission, right? Or the monthly fees, right? So they want you to reset. They want you to blow your account and go pay full price again. That's what they want. Unless, of course, you're using the WMG. Was that the promo thing or whatever? At checkout, if you use WMG, you get the best discount. Whether you use my code or not, Tradeify is still the best, right? So, but yeah, that's a perspective you want to have with that. You know what I mean? Because if you don't have it, I mean, look at the results. People are blowing their accounts left and right. So, you got to do something different. And if you've been trying to pass funded accounts and you just have been having a hard time, because once you get that first withdrawal, you blow it. I mean, what are you doing? Right? Like, you got to change stuff. You got to change the way you're doing things. Be more conservative. They want you to come out here like a Lamborghini or a rocket and just try to fly to the first withdrawal and then immediately take it out. So you're behind the eight ball. Now you're max loss. Like, you really can't lose. So the emotion is crazy. That's why you fail. Versus having an organized plan, trusting your process, giving yourself like 6 months before your first withdrawal once you pass the funded account, so you can build the buffer. Maybe you get the buffer, maybe you don't. Maybe you have a hard time because you're getting used to the fact that it's actually live, and all the stuff prior to that is demo. It's a different world. You got to grow into these things. I didn't like to hear that early on when I was first trading, when I first started. Experience this, experience that. Again, the best analogy is a military person from boot camp, right? They just got out of boot camp and they're getting tossed into World War III. Okay. But then their commander is someone that's been there for 20 years, had multiple tours in combat, multiple times has he been shot at and survived and been through that stress. He's not going to be worried about it. He's going to slowly and methodically get to the goal so he can have a successful mission. Push when he needs to, slow when he needs to. Doesn't let things affect him in the moment, right? Something may not go as planned. Okay, great. They figure out a way to get around it because they have experience and they trust in their experience. Versus the boot camp person who's panicking probably every 5 minutes a gunshot rings out. So that's the same thing with you in trading as a trader. When you first start, we're babies. Our mind is not calloused or even prepared whatsoever biologically to be able to deal with this stuff. So especially when money's on the line. So you have to look at things differently. It's going to take you time. You're going to learn the technicals and you're going to feel great. You're going to go into the chart and when no money's on the line, you'll be perfect. Or at least, pretty good. So much so that you'll convince yourself to go try to jump into funded accounts before you're ready. Jump into live accounts before you're ready. I mean, you have to get experience, obviously, through actually touching the market. Losing, winning, making it back, blowing accounts. You don't have to blow an account. You just got to take good advice. But there's some stuff that you're going to have to learn through experience, that's for sure. And live trading is one of them. I've been trading full time for going on 5 years now. First year was a fucking shit show. It was terrifying. Right? Every trade I took, even though I'm good at trading, I would be panicking, worried about it. What if it doesn't work? What if thinking all the same crap that I literally learned over time to not think? Like, things just go out of the window. But luckily, I have money saved. I did this properly. So whether I won or lost didn't matter. My bills are still paid. And I had to sit and understand that I just got to trust my ideas. Right? And this is where the 20 to 30 points idea became so special to me, because it kept me in the game. It kept getting me motivated. As long as I didn't overtrade, the numbers would work themselves out because I'm very accurate, which I prove. You don't got to take my word for it, right? Just look at what we do, right? So with that being the case, you know, why not trust yourself when you're in that position, when you see over years that you can call the market? Why not trust yourself? It's hard though. It's a battle internally, which is why I talk about psychology all the time. Because I can teach you all the technicals and we could be right 100% of the time. Well, 99% of the time, right? But that 1% likelihood of us being incorrect, if our mindset is not trained properly, if we don't have that experience, like a military veteran who's been in war multiple times, who's calm, cool, and collected in the stressful environment, these things are going to plague you, right? Things are going to come out of nowhere and hit you when you least expect it. And you got to have practiced getting through these things. So long term, you can end up becoming the trader you're trying to become. And all of you will get there at some point if you keep this stuff at the forefront of your mind and actively every single day admit to yourself that this is hard, but I have rules for a reason. And I'm either going to operate like a professional and have rules, or I'm not. And only one of those traders can be successful. The other is going to fund the trader that decides to be disciplined and do things the right way and have the right mindset. There's no in between. In between is break even, but that's basically not profitable, right? Nothing wrong with being a break even trader. You have to get there before you get to profitability, because once you're a break even trader, you're proving to yourself that you're not blowing the account. You're not being reckless. So the trust that you should have in yourself should be a lot more than someone that goes in and overtrades every 5 minutes and it's just is looking for the rush. Right? So this requires a lot more than people realize, but time is something that none of us can avoid. Even if you learn really quick and have very quick success, the experience that's not there yet, the moments in price that you have not had a chance to overcome yet, they're going to creep up on you. And if you don't have a strong mindset, strong conviction through you backtesting and putting in the time that allows for you to deserve to be successful, if you don't have that, you're going to have to get it. And it comes with time. It's not all about technicals by itself. Experience plays a role. Having the right mindset, understanding risk management plays a role. Being disciplined plays a role. All these pillars, if one of them is out of whack, it's a problem. So we have to admit to this. It's boring stuff to think about, sometimes uncomfortable, especially if we've done poorly with all these different things. But you can literally change things today. You can go from a trader that doesn't follow rules to a trader that automatically follows rules. I have a good case study of this, at least from what I've been able to identify, with one of my new students that joined my private group, right? He started noticing something that happens every day. He was on the live calls every day. Within a month, I would say, he's on his way to passing funded accounts. And the statement, you either have rules or you don't, he repeats it all the time, right? So I'm assuming, I'll probably got to ask him later. I'm not sure if he wants me to shout him out, so I'm not going to mention his name, but I don't know how things really were before, but clearly if you're coming to someone for help, there's something that you need help with, right? And now it's incredible. He showed one of his dashboards the other day saying that I finally am following rules since I've come to this group, or my private group. He started on YouTube from what I remember. I think he was recommended by one of my private students to us. But he's on an upward trajectory since he joined, and it hasn't even been 6 months yet, not even 3 months. I think not even 2 months. Just the switch in mindset, the immersion with people that are truly doing this the right way really does wonders for a person's trading. Because it's like, if you're in a group or around a bunch of successful people, you don't want to be the one that's not successful. You have things that are being shared, perspective, and just overall ways of thinking that are totally opposite to what you may have been thinking about before or how you used to operate. And so proximity to success, proximity to the right mindset, proximity to people that are where you want to be does bleed into you. And this is one of the highest examples of that. Because he came to me struggling, clearly, came to the group. It's not only just me, my group itself. There's so many good traders in the group. It's ridiculous. And everyone's just becoming better and better. Harley's one of them. And again, he has a YouTube channel. Go check out how spectacular he is. But he's his own trader now. Right? But being in proximity to those that are where you want to be, or being in proximity with those that have the right mindset, that have value that you can take away to make yourself better, it's priceless. And that's why there will always be room for traders that are actually good traders who have good intentions in this industry and want to help people. There's always room for more traders. I don't think there's any more room for signal junkie, people that are trying to treat their audience like drug addicts and not teach them independence. I don't think there's any more room for that. We don't need that. It gives the industry a bad name. But more traders that have the right mindset are needed because of situations like I just described. When students get around people that know what they're talking about, that truly want to see you succeed, I mean, it's magical what happens. And that feeling that I get from seeing that, from even you guys here on YouTube who spend time with me, who keep me updated, like Fritz and Tony, it's a really, really wonderful feeling because I know how powerful this is. And you know how powerful this stuff is if you just simply do it correctly and have the right structure in place, the right mindset in place, understand what it means to do the right stuff as a professional trader. Things can really, really change for you. And you don't even know how big it's going to be. You have no idea. It's unlimited. There's no limit to what we do. There's no limit to this gift that ICT gave the trading community. That's now changed it for the better. It's elevated the bar for those that claim they're good traders. At least that's my input on it, right? He's done wonders. But the feeling of seeing you guys succeed is why I come out here live. That's why I have my private group. And I'm not just doing what I used to do and just be by myself, which was pretty boring. Trading's boring anyway, but if you're blessed and you can bless others, why not do it? At least that's my philosophy, right? So I hope you guys get value from these types of conversations because it's very important. Watch who you hang around because before you know it, you could turn into the bad influences you keep around you. So this community will forever be a good influence on you. Bovine. Good morning, brother. Is it new here? We'll watch the replay. I will pass eval this week, and I need to learn about building a buffer. Yeah, no worries. Hit me up on Instagram at WMG Trading, and we can have a conversation. I'd be curious to hear what your story is. I'm a professional trader, just not doing it full time yet. Yeah, absolutely, Fritz. Hey, I love to hear it. You got to manifest it. You got to see it before anyone else does, and be kind of delusional with the amount of faith that you have, not only in yourself, but in God to provide that to you. And if you do all the right things, you get around the right people, like I said, it's inevitable. What we do here absolutely works. There's no arguing with it. I mean, you can argue it all you want, but every time you hop on live calls with me, you're going to see that it's a stupid thing to do. I'm not the best. I never will be the best. None of us will be. There's always someone better. But for the universe that we're in, I really don't think that many people compare. Really, I really don't. People are still really good, right? But a lot of them, they do not have the accuracy that we have. They go in not knowing what's happening for the most part. They decide later on, and there's nothing wrong with that. There's really nothing wrong with that. But again, you have to understand the separation, the difference. Right? We have a very huge depth of knowledge, and we do things that most people don't do, like looking at the bonds and yields. Most people are not looking at it because they're lazy. right? But hey, it is what it is. Did I miss any questions, you guys? No. Okay. I agree. First funded needs to fund the next and the next. Yeah, that's a great way to look at it. Compounding of funded accounts. You really only need 5 funded accounts stacked up, at least in my opinion. I mean, you can go for more, like with Apex, go to 20, but I mean, there's nothing really wrong with it. Honestly, I have nothing really negative to say about it. But it's definitely overkill. 5 is plenty. But if you want to get more, you can. Shoot, 20 accounts or even 10 accounts. If you make $200 on each, that's a nice size amount of money. If you do that a couple of times a month, I mean, you just think about it. Your job becomes insolvent very quickly. But again, it all starts here with what we do, the process. What is your plan? How do you do this thing we call trading? Can you define your system? How well can you define it? And is your mindset and risk management spectacular? Constantly being managed, never letting you go off the rails and lack discipline. You know, these are the things that get you there. And you can pass as many funded accounts as you want, right? You could have an account with every single firm. Use a trade copier and copy all of them together. I mean, it could get real crazy. It really could. I personally am cool with just 5, though. It's really enough. I have 5 Tradeify accounts and 1 TopStep account. So, yeah, that's more than enough. I wouldn't copy trade them. That's 5 different arrows. Yeah, you can look at it that way. Just depends. If you want to compound the small risk, that's one reason why I like the stacking funded accounts, because you can use small risk and just copy it over multiple accounts, and you know, things can get real crazy. And then $200 per trade really seems like it's pretty incredible. Tony says he's on Tradeify now. Nice. Bringing it back. You might, hey, make sure you're bringing it back to you first, brother. You and your family. But I'd love to see it. Can't wait to see what else you guys do. But yeah, so okay, hopefully you guys got value from some of the stuff we just talked about. Hopefully you got value so far. If you have, definitely like the video, subscribe to the channel if you haven't already. It helps the algorithm push this channel out and gets these proper conversations in front of the people that need it. And then, you know, we build nice relationships here. We're a little family here on YouTube. Same thing with my private group as well. So I appreciate all the support. And if you guys can do that for me, I appreciate it. Like the video, subscribe to the channel. Jen said starting a fresh set of accounts this week. Was debating copy trade or not, but I think. Are you using different firms? I wouldn't recommend using different firms and coupling them together. I would just stick to the one, whether it's Apex or Tradeify. Tradeify is definitely my favorite. Lucid's good too. They're like a sister company to Tradeify. So Lucid and Tradeify are the 2 I would like. Don't get me wrong, I'm definitely going to 5. That with also 200. Yeah, no, exactly, Tony. I totally agree. It's a reasonable way of thinking about things too. Most people are like, I need this $10,000 withdrawal, blah, blah, blah. Like, let me get all this money like right away, and they crash and burn. You know? Yeah, I agree, Jen. Those are the 2 that I've used that I really like. I like their owners too, the CEOs. There's not really many horror stories about them. They have a good reputation. Lots of ICT traders too work with them. So they've also helped them cultivate their rules. Like Trader Kane, he has helped Tradeify create their rules, or he did like a year or 2 ago. It just became better. You know, it's just unbeatable. And if you're consistent, you just go to the automatic funding route. If you have the money to invest and you're profitable, I mean, it's really, really good. Let me see. 4 legend accounts. I'm about to get the 5th. About certified accounts. Yeah. Nice. Just jumped in. Can you define your model? So we're not talking about a model right now. We're talking about the overall process of determining bias and narrative. And that process is discussed throughout the whole entire call. But yeah, speaking of the analysis, we could jump right back into it. So again, the bonds we said are going to go lower. The yields are potentially going to go higher. Futures Ninja, by the way, my model for entry is simply the breaker and one of my flagship models that I created, which is called the Razor model, which is based on a double change in state, which I define all the time. I'm not going to get into it in depth right now. And then, of course, we have market maker models and Power 3 generally for the framework. That's like if I was going to explain things in the quickest way, that's essentially a highly advanced perspective on those perspectives for the models for entry and then frameworks. And when you hop on these live calls consistently, you'll see all the different elements on full display. So I appreciate you hopping on. We're like an hour and a half in though. So I just checked. South Africa is one restricted. Oh, that sucks. That sucks, Fritz. It's okay though. Just a barrier. There's lots of opportunities still. And again, you have this skill set. You've learned it through all your times that you spent here and in ICT's concepts. So that you have something that doesn't matter where you go. You know, you'll be able to do some really amazing stuff. Okay, so again, we got the bonds, like I said, going lower, yields going higher. So we'll see what impact that has. The only way I'll look for this to go lower is if we break or give up this fair value gap here, okay? So yeah, that's the perspective on the interest rate market. So let's go to the DXY real quick. We're kind of late in the session for us to be getting to this, so I will fly through this. But I think we had productive conversation, right? Appreciate you guys having that dialogue with me. Those are the important conversations, you know what I mean? The technicals can only take you so far, right? It's the other aspects of things that need to be organized properly. You know, you have to have the right mindset. You can't be like everybody else who's just a gambler, who's like a drug addict in the marketplace. You know, gamblers, people that are impulsive, they don't succeed. Unorganized people, they don't succeed. People that don't respect risk, they do not succeed, no matter who you learn from, even if it's someone that's correct as much as we are. Okay, it doesn't matter. I mean, ICT is super accurate. Most people fail using his concepts, right? And most people fail using every concept. And it's not because the concept doesn't work. If someone's showing that it works, right? But it's you. Are you willing to follow the rules? Are you willing to build the right mindset? And are you willing to follow the rules, right? And not be a reckless gambler, right? And if you are that type of person that can have all that stuff in alignment, then you know trading is going to be a wonderfully fun thing for you, and it could change your entire family's life, as it has mine, right? So yeah. So if we got the bonds going lower and the yields going higher, we're still going to have our perspective aiming at this monthly fair value gap that we've had identified for the last month and a half, right? Ever since price broke above this high, that thing has been in our crosshairs from this monthly perspective. So this is accumulation. We have taken out sell side and we are now continuing to rally higher. So we got one change in state here. We have a second change in state here. Simply that order block being traded through, coupled with this one as well. This is actually a propulsion block as well. We got this order block inside of this order block. So again, the midpoint of this upper 25% becomes very sensitive. So if this is going to be bullish, again, we got a wick in here too. We do got that bearish breaker, but again, I really do like this fair value gap. So I'm going to bank on us reaching for that. Just like in the other assets, we got to take the most recent high and low for the monthly. That's our liquidity pools. We're far away from the low, so this high up here is what is going to be significant. We have taken out stops here. We have a balanced price range in here. If we're going to keep going higher, right, we have this high. Oh, we have the high up here. We got the lows down here. So we have buy side, sell side, buy side, sell side. and we've left that range. So we got accumulation, manipulation lower, distribution. We're now in the rebalance phase, trading into that upper portion. So we need to stay above the upper 50, upper 25%. And as long as we do that, our objective is going to be aiming at this monthly fair value gap. I talked about this wick last week. Whoops. I talked about this wick. I talked about this gap. I talked about equilibrium here. And again, I talked about this as a balanced price range in itself. That's this high to that low. So this was a market maker buy model. Again, we navigated this whole entire price delivery, running price up to the buy side. Okay. And now that hasn't changed, right? Nothing has changed. If we take this daily and go to the weekly perspective, we also have a little bit more to identify. Okay, we got the weekly level here. Let me actually make it purple. So we got the volume imbalance mixed with the gap in here. We do have a discrepancy in here, so it's a little bit sketch, but nonetheless, we still see in this price delivery that there's still a little gap in there. So I'm going to be watching that right there. So again, as long as we stay on a closing basis above that, as long as from this daily chart, we could see price continue to stay above this gap here. If we can get this to break above this high, again, that is a deep confirmation that we're now going to start continuing to go higher. We have a low, high, failure swing. If we get displacement, staying above this gap in here on a closing basis, continuing to wick through it, staying above the midpoint of this monthly wick level, make that straighter, which is right here. Right, if we stay above that, stay above the gaps down here, stay above this balanced price range, we do not close in this gap entirely. We never revisit this order block. And then we go to the daily chart and we see a mitigation block form by leaving this low available. This is clearly showing respect to that level right there. We're clearly in a retracement, right? Rally retracement. We have a very clear monthly objective. We have trendline liquidity up here. If it breaks this mitigation block high, which would confirm that this is a mitigation block, when it returns into that, price should look to accelerate through this liquidity, which again, this is a previous week's high. Going back to the liquidity mapping list I gave you guys. Okay. Then we also have this previous week's high. So we got 2 weekly highs, and we have CPI coming next week. You think CPI can't hold this level if we're going to continue to be bullish, and then in one fell swoop blast through this very frothy liquidity pool, coupled with a gap that's above us acting as a magnet? You think that's not a possibility? Looks like a pretty good possibility to me. And if we can't get that to unfold, then price breaks down. Right, this right here, right? We have a low, high, breakdown with a failure swing here, basically. So high, low, failure swing, breakdown. If we do get displacement from here that closes below this low, then this will have proven to be where price topped out, created a mitigation block here, bearish. And then we'll look to see this low, high, breakdown as a balanced price range. All of this will then look to be a balanced price range as well. But again, that's only if this breaks, right? If this breaks down below this, that'll upset our ability to get up here. And what that would confirm to us would be this breaker here from that 3-month chart. This breaker will then be solidified as a continued move lower. A continued respect being shown to this will promote potentially longer term continuation to the downside. And this will go from us thinking it's a bullish power 3, rebalance to redelivery, to now bearish power 3 as a potential, using the quarterly breaker here as the core of this retracement to then go lower from this monthly perspective. Okay. See, is it the quarterly? Yeah, it's the quarterly breaker there too. It's also the monthly breaker too. So 2 time frames confirm this PD array. So again, if this is a breaker like it is, this low, high, lower low should not go beyond the lower 25% of that breaker. We're not even there yet. Okay. So it could, if it still wants to go lower at some point, run up into this, tag this, and then start a rapid decline lower if we're going to continue to see this tank. And geopolitics is going to decide whether that's the case or not. Okay. Slide call this week. Let's top down start. This is yeah. I appreciate you saying that. As a reminder, Fritz, to him. Tony says same markup. Oh damn, you had the same markup. Okay, that's good. That's how you know you're making a lot of progress. If once I come out and start talking about things, and you did an analysis prior to me going live, and you see that everything's aligning, or at least most things, because everything's not going to align, right? You're going to see certain things in the chart that I don't really like to see, right? We'll be aligned a lot because you guys are learning from me, and I'm pointing out very important things. We also talk about a lot of concepts. We don't talk about a couple of things. So there's going to be a lot of commonalities. But if you can have a lot of common perspectives from what I show you in the chart, that means your eye, in particular activating system, is now getting familiar with what's important in price, so you can help yourself determine what the overall narrative is. That is clear evidence of you walking towards independence, which is my entire goal, right? Like my whole goal is to get you guys to be independent. And I love to hear students say what you said, Tony, how you got the same markup, you're seeing the same stuff, because that's literally my whole objective. It's not to make me look fantastic out here. Okay, I got to obviously talk about how great I am in some cases, while being humble at the same time, just so students know that there's confidence here, right? Some people need that. If I didn't have to do it for people to recognize, I wouldn't do it. If people had attention spans to just watch the chart and see what we're talking about, I'd be able to just simply show those kinds of opinions. But it is what it is. But you're going to feel that confidence too, and I want you to be confident in what we do, so you can be confident in yourself. I want to share that with you because I'm confident. I could be extremely braggadocious if I wanted to be, but I don't want to do that. I don't like those types of people that are that way, and I'm definitely not going to be that way either. I'm going to sprinkle some here and there because, hey, this stuff is unbeatable. I mean, there's no arguing with it, but, hopefully you guys get to the point where you're confident like that too. Borrow some of mine. Look at what it's doing. Do it on your own. Do the work, and you have every right to be confident. Fritz said, "Was some consolidation for DXY be weird?" No, not necessarily. I think we've kind of already been in consolidation though. So small ranges are happening in here. I mean, there's some big ranges, but for the most part, relative to this, these are small ranges, right? So we're due for some type of expansion. And think about this too. If you're in an expansion, you trust that it's going to go higher, and price is in a mode of retracement, the best way for you to confirm that we are now back in line with the continued bias, in this case going higher, so and you're confident that you're going to be part of the continued expansion, the way that you get to that point, the way that you observe when it's time for it to start continuing, is by simply looking for a change in state of delivery. Like this order block being traded above. In that case, for a fact that we're probably in line in terms of timing with the expansion, and you're done with the counter trend retracement phase of this particular move, right? And if you can also, before that, you also can see, like I said, the mitigation block. We do have a swing low here. So technically, if this high is violated, we have a low, high, a lower low that then breaks above the high here if it gets above that. Once it comes back down, that becomes a bullish breaker, right? We have a low, high, lower low, breaks above that high. Again, that's a breaker. Or you could take this low, high, failure swing that gets above that. It brings you to the same spot, whether you're thinking mitigation block or breaker. Mitigation blocks and breakers are pretty much brother and sister. One has a failure swing, the other has a stop run. It's as simple as that. Same functionality, so on and so forth. Okay. So again, for the DXY, as long as this low stays intact, as long as this wick remains above this level, and again, as long as this, which is the weekly fair value gap, as long as that stays intact, again, I think we have a very, very solid chance to see continuation. And how do you know it's continuation? How do you know it's time? When we get above this high. If it accelerates through it, that's wonderful, because now we got low, high, failure swing, break above the high. That becomes a balanced price range. We've already been in a mode of retracement. It's been expanding. We have very obvious targets up here. And that right there is just like the linchpin, right? Once it's pulled, should be able to have the ability to explode up into this, especially if we get above this as a result of CPI, right? We may run up and then PPI comes out the next day. We may pull against it and then rally up again. And those two news events will be the catalyst for us to have gotten to this higher time frame level. Again, higher time frame levels and higher time frame delivery that takes place starts within a news event, right? So the news events act as macros for those bigger perspectives. If we're wanting to get a big move up into a level like this, we're in retracement. It just seems like we're setting up ahead of CPI to get us up there. Also, the talk of rate cuts or rate hikes, that's going to skyrocket the yield market. That's going to drop the bond market. That's going to rally the indices, or it's going to rally the DXY and drop the indices in foreign currencies if that happens. That all looks like it's setting up right now to be the case. But again, we're in anticipation for what some of these news events are going to do, because they're going to be used. And again, if you're looking at higher time frames, if you want the breaker to deliver like this, right, like with this candle, you want news events to start that. So you got to a lot of times wait. If you have a bigger narrative you're framing, like say you wanted to run up into this fair value gap, okay, well, that's going to require some type of news, because that's institutional sponsorship. It's planned institutional sponsorship or manual intervention. And then once it gets up into that, most of the time you're going to need another news event for it to push out of it. Like we're inside this weekly fair value gap here. Okay, in order for us to get out of that weekly fair value gap, we need a news event to trade to that news event, right? In this candle here from, was it 2 weeks ago? I can't remember what the news event was, but there was a news event. I think it was NFP actually. Right, so NFP dragged us to this weekly level. We're now inside that weekly level, and now we got CPI coming. So from this level to get up into this level, we may need CPI, PPI to then get us to run up there. This is an example of using things on the news for macro purposes, like timing wise, like macro and time, not macro like overall perspective, like longer term outlook. Right? We'll use macros on the lower time frame, last 10 minutes, first 10 minutes of every hour. But the news is like, it plays that role when it comes to like the daily, weekly, monthly, and even quarterly charts. Okay? So again, as long as all this stuff stays intact, you know, this is simply just a run down to a equilibrium price point. Can actually move it up a little bit. But you could see this fair value gap, which is also a weekly fair value gap. If you take the low to the high extreme, that is a actual discount array. It's a PD array inside of a discount, like an order block fair value gap or any of the other ones that we talk about. When you have a range that you're outlining and you find a PD array that's at a discount and you're still bullish, when price comes down into that, you got to consider what it's going to do around there, because it could be loading up smart money buys. I mean, this stuff is happening ahead of CPI, like I said. So smart money dragged price lower for 2 weeks, 3 weeks. Well, last week it didn't really do anything. And so now CPI is coming in. So they built up liquidity, built up interest on both sides. Maybe they look to punch down one more time, tag this, but they end up staying in the middle of this level here. Right? We're at the middle of that fair value gap. That's also at the middle of the range. It's equilibrium plus the midpoint of the fair value gap on that weekly chart. Okay. So yeah, I think that CPI is going to play that role this week, and PPI. I think it will be used. All of this was being accumulated essentially. The yields support that idea because we're looking at the yields to go higher, like we talked about. Okay. Balanced price range looks like we're going to keep looking to go higher. Market maker buy model. Accumulation should turn distribution going to the upside. This is the completion of this big market maker buy model. We're anticipating rate hikes, right? It's going to drop the bond market. At least it looks like it's going to. Looks very beautiful for this relationship to unfold in this way, right? So we're going to keep that in mind. So that's my opinion on the dollar. We will see how things unfold throughout the rest of the week, but that's going to be my objective for the week. And again, when you take this information, I don't even got to look at the other markets, currencies, and the indices. If these do what I just mentioned and we're symmetrical, we got a baseline of what we think the other assets are going to do before we even get there. But this is why we spend so much time on these, right? So with that being said, hopefully you guys are able to make sense of what I just talked about. Hopefully you guys are able to follow along. Let me know, of course, if you have any questions. Weekly time frame, price seems to hold for a bullish order block. Weekly time frame, price seems to hold the top of 4 bullish OB candles. For dollar? Top of 4. Top of the 4th candle. Talk about this here? I'm confused. Week of 12th of May 2025. You talking about right here? Oh, I see what you're talking about. You're talking about like this being a market maker buy model. I mean, yeah, again, everything is the same. So I wouldn't go against that opinion. The question is, though, is how long is this going to be bullish? So we'll have to obviously wait and see. That is definitely something you can consider, right? We're above that. Look how perfect it's respecting it. This is previous accumulation, turn distribution. If we're assuming this is going to be a buy model that targets up here, I'm not going to necessarily be too certain with us getting back up here until we break through this monthly fair value gap. Until it gets to this monthly fair value gap, though, I'm looking to be bullish. Unless this low is violated. This is a beautiful example right here of the 3 PDA rule. We got an order block here. So if I'm going to continue to validate this, whether I'm on the 5-minute, take away the time frame. If this was a 5-minute, 1-minute, 20-minute, 4-hour, 10-hour, 1 year, 50-year, 5-year, I don't care what time frame it is. If this is what the chart looked like, and I was looking to validate whether I believe this is going to keep going higher or not, the levels you'd have to pay attention to is this order block, right? Is it going to hold that and then break through this low? Because if it is, we have a fair value gap here. It's also a volume imbalance on its own, but that's a fair value gap merged with the volume imbalance. We got a bullish order block and we got a swing low. So this breaking that low puts this in jeopardy, and we got equal lows right there that could be targeted too. So that's the perfect example of the 3 PD array rule. If you entered here, maybe you saw the 2022 model or whatever you used. Okay, maybe you just entered on this for whatever reason, and that's your entry. Okay, if you're in the trade and price is going up like this, your stop could be below this low, because if this breaks down through that, your entry's here, you've now run stop to break even when it rallied up, you could place your stop here, because if it violates that, you're probably wrong anyway. Because again, why? It's 3 PD arrays. If 3 PD arrays break in your intended direction, the next thing that's going to be broke is you, in many more ways than one. Okay? Mentally, financially, everything. Assuming that you overtraded and overleveraged. But, you know, if you were to be wrong about anything, it doesn't matter. But to gauge and manage your trade, or overall narrative idea, this is how you would do it. You'd look at where price is currently at. If you're bullish, so you got a target, the only way that gets upset is if you start to invert these levels. I mean, that's an early sign if it just simply inverts that. You'd have to see it come back. If it comes back and displaces, that displacement, coupled with this low being taken, which is part of 3 PD arrays being violated against the upside move, that's how you fully confirm that, okay, we're now switching longer term to go bearish, because this is a weekly chart, it's more longer term. If this is a lower time frame chart, right, it could just be simply shifting a little bit, come down and take this. Maybe that's inside of a larger overall buy situation, right? The context when those lower time frame charts are being analyzed is obviously very significant. But when it comes to this being the weekly chart, that is where I would change my opinion to then want to see the dollar go lower. You also have this high to that low. Midpoint of that is right below that low. So if this violates that too, we not only have 3 PD arrays being violated, but we also have a previous balanced price range now looking to be inverted and disrespected. It needs to stay in the upper 25% if it's going to keep going higher off of a bullish balanced price range. Upper 25, upper 50%. Even in this moment in here, right? Before it even took out the high, it still ended up staying above those levels. Because again, this is the market. This is how it works. Okay. So again, we're going to keep tabs on this. We'll see how this ends up unfolding, but wait, let me go to this stupid ad. Okay. So yeah, if everything stays intact like it has from what we talked about all these different assets, we're going to continue to push this thing higher, okay? Unless it was to violate some of the levels I just mentioned. So hopefully that makes sense. That could be a start for the next 2 quarters. Yeah, it could. It could be. Exactly. I agree, Tony. We'll keep tabs on it, obviously. I think I got the beginning of the start on the currencies. Yeah, every time we finish these assets, from the bonds and yields to the dollar, you have the beginning stages for the other assets as well. Okay, I got it. Okay, does everything make sense, you guys? Just throw 1 in the chat if it makes sense. If you've been getting value from today. Again, don't forget to like the video if you haven't already. Subscribe to the channel. It's a free way to help the community grow and show me that these videos are valuable to you. Okay, thank you, Tony. Appreciate you. So now let's move on to the currencies. I'll work a little bit faster to get you guys out of here. I know we've been on for a while. But hey, you know, a lot of conversations that we have need to be had. And I appreciate you guys engaging with me and being patient. You know, eventually we get to everything. But this stuff is useless as some of the other things that we talked about today are not at least acknowledged. I appreciate you for saying that, Tony. See, if I didn't have value, if I didn't teach you guys stuff that you've been able to prove is helpful, you guys wouldn't be hanging out with me for 2 hours straight, because I don't give you signals. I don't give signals. I kind of do. I hint at where price is going to go, and I say, oh, this is probably something to watch, and it's probably a good idea to study. And then, high 80, 90% of the time, it runs right to where we're targeting from that level that I kind of hinted at to a level that I outline, right? So that's what makes this community special and way different But that's also why the students that support this channel are going to be different as well. Like all of you guys that are with me today and are always with me all the time. My foundation is way different than the last year's. Hell yeah, bro. Hell yeah. It's a good thing that you don't need signals, Tony. I give them in my way, but that doesn't it's not helpful. And I like to see you guys do it on your own because I know this stuff can change everything. It'll only change everything if you become the signal provider. And the only way you do that is by having a depth of knowledge that most people don't have. We don't use indicators. You see stuff on my chart, but it's just outlining certain ICT concepts and time. It's stuff that I would already be marking up on the chart anyway. See, I learned how to read price on everything. Yeah, exactly, Tony. I love hearing students say that. Because again, that's what I'm teaching. I'm teaching you to read price. And you could take that and do whatever you want with it. You know, you could be your own signal provider. You know, and you could do whatever you feel your heart is pulling you to do in this industry, from trading to other businesses to whatever the case may be. The doors open up ridiculously. Or if you just decide to be a trader and that's all you're going to do, right? I think that's the best thing to do, unless you have an interest in helping others. But you'll get to a point in your trading where you're like, do I really want to do all that extra stuff? Like, I might as well just go be on vacation. Go take my kids or take my spouse or take my family or retire my parents or, you know, whatever the goal may be, you know, take care of them. All that stuff takes a lot of time, you know what I mean? So you gotta want it if you want to do anything else. But you're probably not gonna want to. When you can click buttons for 2 hours a day and, you know, keep up your studies, right? Like a business owner, they don't just go on vacation every 5 minutes. But if your business can literally be, I go on, determine where price is going to go, click some buttons a couple times a month, and I'm able to pay my bills and then travel, do whatever the hell I want, make as much as I want. I mean, it's going to be kind of hard to want to do anything else, you know, unless you have a real passion to help people, you know, and you want to serve your time. You're not a bad person if you don't. If you just choose to live your life and just live your life, right? There's nothing wrong with that. But this gives you the ability to help others. And if that's something you feel called to do, then that door's open for you. Yeah, let me see. You mentioned your interest in something. If it happens, yeah. We give all the different scenarios for it, for sure. But that still gives us plenty of time to study and agree. Exactly. What you just said right there is significant. You get plenty of time, but you also get the opportunity to either agree or disagree using logic that I'm sharing with you. Because sometimes I'll see a buy and you'll see a sell, and we could both be profitable because the concepts work in both directions at all times of every single day. There's just one main story from that higher time frame. But that doesn't mean that we can't have differing opinions, use the same concepts, and still be profitable going both directions. I call buys and sells all the time in a move that I'm maybe bearish on, or vice versa. Maybe I'm bullish, but I'm catching or pointing out a retracement to a level that I'm expecting is going to now continue with the bullish trend. And I get you guys in position to see and study the counter trend idea. I explain how the counter trend ideas manifest from opposing PD arrays, for example, from opposing liquidity to your overall narrative. And then we point out PD arrays that could be used for price to run down into and then go higher if we're bullish, or vice versa with bullishness or with bearishness, right? Watching your live calls with finger on the trigger is not a way to approach. Yeah. I mean, that just clearly shows a character flaw. Like you're waiting to be served a signal so you can engage to make money, because learning is not the main importance. Like, when is he going to call the trade setup? I can start a signal service and probably do a crazy, like do something insane. But I don't want to do that because I don't want to instill that in you because it's not going to help you. I mean, it may seem fun at times. And if you're here to learn, you still get rewarded by me sharing certain signals. So it's not like I don't give signals at all. Right? Again, it's not financial advice or anything, but I point to things, and a lot of times they work out. So no worries, Fritz. I appreciate you hopping on, spending time. I know you be caught up on time a little bit. But yeah, brother, let me know. Keep me updated. Give me an update how things have been. I don't think we've had a conversation in a while about where you're at. So just let me know. I look forward to having that conversation with you. But God bless, brother. Have a good rest of your day. I'll see you on Tuesday. But yeah, so coming back to the currencies, again, we got the weekly chart, prices running up. We're hitting this level. This could very easily just be a retracement. If we're thinking 3 PD arrays, what's our third PD array that would need to get violated in this price delivery? This high. We had SMT up here, prices declined. We see a lot of things promoting the fact that this is going to drop from the bonds and yields and the dollar. If dollar keeps going higher, this is going to reverse and look to want to go lower. Right, we are kind of just in a range, right? You could technically say that this high to that low, we're right at equilibrium. Last time we were at equilibrium inside this range, what did it do? I mean, you could see it consolidated. Does it have the opportunity to consolidate and not really do much today? Sure. Right? I wouldn't be surprised if we just stay stuck. But we'll see what happens. If this gets above this high here from this weekly chart and the dollar collapses, then this may end up acting as a change in state of delivery, shift in market structure, bullish balanced price range after a stop run that we could then utilize to then target the equal highs up here, assuming that that happens, right? If it happens. For now, though, given that there's so much stuff promoting the fact that this is not going to do this between the bonds and yields and the dollar, because that's the case, I'm just going to assume that, this may act as a rejection area. This is a balanced price range. We should be able to stay below this low to that high's 50% level on a closing basis. We're already doing that. So if we could see this the previous weekly candle closed right at the midpoint. You see that? That's not random. This previous range is now being closed below. So if the next candle comes out and then we fail to reach above this level and it aggressively reprices below this candle's low, that's an early change in state of delivery off of this simple retracement that then may look to go lower. We just came up to a premium. Now this up here again is a line in the sand. So this is something that I would be keeping tabs on for possible invalidation, at least short term, for this overall idea to continue to go lower. We see that the euro is definitely following the dollar a little bit more. GBP is kind of doing its own thing. But we'll see how this weekly order block continues to be respected on the euro. We've already taken stops right there. Take off that. What the hell is it not giving me back my line right there? I guess. So yeah, we'll look and see if we can tag this. We got this low here. If we take this low here up to that high, we got midpoint. So price has basically perfectly met that. So if this is going to be bullish, this delivery is going to have to hold price in that upper 50, upper 25%. We're barely respecting that at the moment. It's digging into the lower 50%. This is a 3-month inefficiency. If we go to the quarterly perspective, so we can clearly see from this high here to that low, there's a little gap in there, and price seems to be accumulating in that. If this quarterly perspective was a 5-minute chart, what would you be thinking? Well, we're hitting a fair value gap. We took stops, shifted market structure, 2022 model potentially to go higher. We have a low, high, failure swing, break above the high. That's a mitigation block. We have a high, lower low, higher high. It's a bullish breaker. We have a large wick here. So there's lots of levels in here that need to hold in price if this is going to give a bounce. If it's going to go short, though, we should see this really have little to no respect. It should collapse through it aggressively. And if we do that, we also have something else to look at, which is right here. This inversion fair value gap, once it closes below it, that may be significant to help support this idea continuing to go lower, assuming that the dollar keeps going higher. Okay? So I'm definitely going to keep tabs on that. It's a previous weekly fair value gap. All right, that's good to hear, Tony. It's good to hear. And again, when we go back to this weekly perspective, that 3-month inefficiency, like I said, is right there. We got the 50% of that range. Let me actually place these levels here. No, I think I'm going to keep that actually. I'm going to just move this over. Make it less like aggressive. So yeah. So again, as long as this continues, we're already potentially being supported by this. If we get big displacement, again, we're coming for this low. If we take out this low here, which again is eating up this inefficiency that formed, if we take out this low, I'm immediately looking at this as a potential market maker sell model. And we may look to try to come down into some of this. And then we could eventually end up talking more about this as well, this gap. But again, this is going to be all dependent on what they do with the dollar and the bonds and yields as we move forward, okay? So we will see what happens with this. But that's my opinion, okay? And if we're going to continue to see this go lower, it needs to stay below this low to that highest 50% level. So below this lower part of the inversion fair value gap, okay? Just like with the other assets as well, we look at the low, most recent low, most recent high. So these liquidity pools. So as price is reaching into these lower levels potentially, this is the first liquidity pool we got to look at. We're inside of a weekly bearish order block. So this weekly bearish order block should be able to be used along with this weekly inversion for value gap we just outlined. These things should be able to be used to get us down below this and then maybe even set us up, like I said, to get us down below this. Each of these lows is a weekly low, so that's significant liquidity. Oh, wow, I didn't notice. We got relative equal lows there. So that makes me even more confident that it's going to get down there. And again, just like in the other assets, when we talk about invalidation, when it comes to this, we have an order block. We have an inversion here, right, from a long time ago. Swing high. What else? Yeah, and I think that'd pretty much be enough. I mean, you could use this small fair value gap in there, but I think the bigger one is useful enough. So when this high gets taken out, that's when you know you're going to be bullish. Otherwise, this low to that high, breaking down below that, staying below these levels, it's going to continue to confirm that price is going to keep going lower. And we got the high to that low, we got midpoint of that as well. So that in itself is also a PD array, being the balanced price range equilibrium. So just another reason why when this high gets closed above, or just, yeah, closed above, if we get displacement through it, that would be a trigger for us to then switch to buys. But otherwise, we're going to keep seeing how much further it can go lower. Okay. So that's my opinion for the currencies. And we'll see what happens with the GBP. This is kind of crazy. If this is going to be trustworthy, the dollar has to collapse. Which I'm not sure if they're going to do that until they get to the monthly fair value gap. That's when I'll anticipate if we get a sharp decline. But who knows, right? We'll see. We'll see what it wants to do. But I'm assuming that this will end up, at least for the euro, looking to go lower. If the dollar collapses, then we'll see this get traded above. And again, things will end up going higher. So, but for now, gun to my head, I want to see if we can't get price to aim for this. We want to keep this in mind too. This high to that low. The midpoint of that, basically right below the inefficiency. If it's bullish and it is going to tag this, we're not going to breach the midpoint from this high to that low. So basically the equilibrium point right there. That's a very interesting level, huh? These equal lows. It's basically right at equilibrium from this high to that low. This is a bullish order block. Right? That's why this is important. So I think I'll leave that on there just as a reminder. Again, I hope this stuff makes sense. Let me look at the questions showing up here and just learning. Yeah, it's the best thing to do. And then back testing, obviously, whatever you learn. Did you Chris? The candle is scary on Forex, but I know it's happening in the 4-hour and daily. Yeah. Yeah, I mean, you really only need those 2 time frames when it comes to higher time frame. If you want to be a freak like me, though, who's obsessed, who wants to know very, very long term with confidence, unless something geopolitically happens that throws everything off, you use a quarterly, monthly, weekly, yearly, 6-month, and this stuff becomes super helpful. Yeah, you really don't need it. It's not a be all end all, but people wonder why I'm so confident and can call the market weeks on end at the same time across multiple assets. And I'm not really swayed and I stick to my narrative. How do I do that? I'm anchored in these massive time frames. Right? At least a quarterly chart. Because you got 4 quarters in a year. So if you can identify what direction a couple of those quarters are going to go in, or just simply each quarter, if you're able to have an idea of what it's reaching for, I mean, that's 3 months of consistent narrative that may be unfolding. And if you're anchored in that time frame, whatever happens on the daily, weekly, even the monthly chart, that stuff may not fool you. Right? The monthly is going to generally agree with the quarterly chart, but because there's 3 months or 3 or 4 months in a quarter. 3, because it's 4 quarters in a year. So yeah, 3 months in the quarter. So that's 3 months in advance. I mean, I'm sure you could see just from that explanation, if you can master those time frames, you could see why it's so significant. Right? But yeah, that's a secret sauce, by the way. If you've been here, you know that that's definitely something that separates us. Most people are waiting on the 1 minute, 5 minute, 30 second, 10 second, and then thinking that that's going to give them everything they need to know when it doesn't. So yeah, it is what it is. So again, I hope this stuff makes sense. Hope you guys understand what our objective is here. Now let's move on to our beautiful indices. Put auto real quick. Okay, so this is a shit show. It's been a shit show. If I have anybody in my private group, right, you guys know that even though this is a shit show, we have been ridiculously accurate about where price is going to go, right? For multiple reasons, right? Longer term, though, obviously, we're being very skeptical. We had this run below this low. You notice how price gave a doji, basically a wick through it and closed above the open. That's not necessarily the greatest idea for us to catch continuation. We want this type of stuff. We want closures below, aggressive repricing, not doji wicks, right? That doji wick behavior that closes above that previous area that it just ran stops on, many times that's going to trigger in a rejection response. And we were talking about this real time. And the price ran up. This was a piece of a line in the sand for it to continue to drop and be very aggressive at this moment. We had this high to that low. Actually pull up some of the markups here. So, whoops. So we all throughout last week and the week before and the week before, so for 3 straight weeks, we've been identifying this equilibrium of this overall range. Price is going sideways in this range. And you notice how this big displacement comes back, big displacement comes back, big displacement comes back. When you see that price is looking like this, especially when you're in a clear range-bound environment on the weekly chart, you got to pay attention to equilibrium. You're going to have a lack of follow-through. Can you still find setups? Sure. We've called really, really great moves throughout the week. Those of you in my private group, let the world know that I'm being truthful. It's probably hard to imagine that someone's doing well in this condition. We have done very well in this condition, right? Some take losses, but there's nothing wrong with that. That's to be expected in this type of environment. I've made sure to make it a point that everyone knows that we are dropping our risk in this type of environment until we get price to push away. It's 50-50 whether it's going to take this low out or take this high out when we're simply gravitating back and forth by equilibrium on that weekly, monthly, higher time frame perspective. So what do you do in that regard? Well, you can have an opinion of the equal highs, equal lows that are very obvious at the extremes. You can have larger, higher time frame levels. But again, you're going to want to adjust your overall liquidity ideas. You would go from monthly, weekly, quarterly objectives in a fast-paced trending market to, okay, well, maybe the previous day's highs and lows, that's all I really need to target. And if it can't even get to that, we have session highs and lows, previous AM, PM session, lunch hour from yesterday. We have London, previous London, Asia, right? All those levels. And then we have hourly, 15-minute, 4-hour, 1 hour. Well, I think I just mentioned hourly, right? All those levels can be utilized on the lower time frame from the lens of a scalper when you're navigating intraday volatility. It takes a lot of experience to navigate intraday volatility effectively. You got to know what you're doing. You have to know what the expectation is for the condition. In this condition, it is nasty. If you don't have experience, you really need to cut back on your engagements. Like, you shouldn't be over trading, especially when it looks like this. You shouldn't be over trading ever in general. 1 to 2 trades is all you need. And if you find yourself taking those 1 to 2 trade setups, but you could find things later on, but you're losing after 1 to 2 trades, that's a clear testament that your shot selection needs to be refined, right? Or it's a condition that you're just not going to do well in, at least for the moment. So there's key improvement indicators that can come from you trading in a condition that makes you not really as successful, but you have to be able to be receptive to it and go ahead and be honest when it comes to identifying them, right? And again, as long as we stay close to this equilibrium, it's 50-50 whether it's going to get up here or go down here. We could go out on a limb and say, okay, well, the other intermarket relationships are showing the dollar's going higher, the bonds are aggressively going lower, the yields are going higher. Okay, the bonds going lower, yields going higher. That may influence the dollar to go higher. If that happens, currencies should also go lower. And then we should see the indices, because they're correlated in a positive way, right? They should support the opposite of the dollar, the opposite of the yield market, which in this case would promote us going lower. There's a lot of geopolitical economic things happening, from inflation to things happening in Japan, that are going to have a very dramatic negative problem presented to the market overall. The AI boom is cooling down, right? They're spending a lot of money for expansion, building data centers, and doing all these things. So things are cooling down pretty aggressively. And then you have what people are calling the reverse carry trade in Japan, which is basically been manifested because Japan's interest rates for so many years were damn near zero, similar to how ours were for a while before the 2008 financial crisis. Things were at literally zero. It was a low interest rate environment. So what was happening? People were borrowing money, going into debt because the interest is useless, right? They're not paying really much extra in interest. So they were taking the borrowing power that gives them, and they were putting it into businesses, growth, carrying debt, putting it in the stock market. And in this case, Japan, many people from across the world in all economies have borrowed a shit ton of Japanese yen at almost zero interest rates. And now that monster's coming home to roost, they need to save their currency. So they're going to have to hike rates. When they hike rates, the people that got those interest rates at low, damn near zero, are now going to have to pay much, much more, right? They didn't plan on it because some people are retarded. Some countries are dumb, right? Whoever the hell is taking on this type of debt at zero interest rates. So once that happens, liquidity is going to flood out of different assets. They're going to have to liquidate to pay the debt off because they don't want to have long-term high interest rate. Even 5% is detrimental. Even 2% higher than what it already is detrimental, because they're talking about trillions of dollars, right? So this is something that's on the back end that may be a catalyst. If we see this thing collapse and the dollar rise, this is a catalyst that's in alignment with us potentially trying to drop and have a heavy correction in the marketplace, alongside the AI cooling that's happening. DXY analysis is always a good time. Yeah, 100%. Jen, it's always a good time with every asset. Okay? It's a good time always. The dollar is definitely special, though. But we'll see. We'll see what happens. There's a war against the dollar right now. So, if we're going to hike rates, we're looking to kind of stimulate our dollar too and fight inflation. So I'm not too sure. We have a lot of stuff happening on the back end. We have crypto blockchain technology moving into banking, and XRP and XLM helping the stock market tokenize. Like, there's so many things happening while people are so distracted. We got wars in the Middle East. I mean, it's just like a crazy time to be alive. But there's opportunity everywhere you look, right? Like water. I mean, that's a weird opportunity, but AI uses water a lot. So water is going to become it's already a commodity, but it's going to become very, very valuable. There's only a certain amount of water they could use, or a certain kind of water they could use. And there's only a certain amount they could use before it becomes an issue for us. We have Jeff Bezos saying that we may get to a point where we're going to have to prioritize innovation and growth for the country and the economy to compete with our enemies over the needs of the population. In specifically the context of water. That's insanity to say publicly, but this is shit that's going on. It's a massive opportunity to invest in water infrastructure, people that provide water, so pick and shovel plays to those things. There's ETFs and long-term companies who are pillars in the industry, who I think are going to have a huge role. That's something that I foresee definitely becoming a problem within the next 5 years. I don't think people understand how much water AI takes. Of course, this on top of what I just described with Japan and our economic system and all this stuff taking place, we're in a crazy environment. It's crazy, wildly volatile, and you got to know what you're doing. And I'm here teaching you guys what I know to help you get into a position where you know what you're talking about. You know what you're doing, and you have nothing to be fearful of. I don't care what they do in the world. They could blow up everything. As long as the markets stay intact and we can have the ability to trade, we'll always have something to look at. Maybe it'll be a time when we got a lower risk because, you know, the ranges are a little obnoxious and crazy. Lots of consolidation maybe. But even then, we could still trade. Market maker models work inside consolidation. Everything we use works in consolidation. The main thing is you know that you're in a consolidation, though. So you take the easy targets. But again, in terms of, you know, what I think this is going to do for the currency or the indices here, we're going to monitor all these relationships. We're going to see what happens with the dollar. You know, we're going to see what happens with CPI and PPI this week. Again, as long as it stays close to equilibrium, we're just going to continue to bounce really, really closely back and forth and always return back to equilibrium until we were to do something like this, break out of this. That would then become a high, low, higher high. That's a breaker. So we would look to try to see if there's a reason for this to hold or see if it would have a willingness to hold and then try to get price to push through to the buy side in that instance. And if that does happen, if something like that happens, then again, we got equal highs. And then we're going to trade up until it hits that level. And then vice versa, if this was to smash below and start to get us below this level, we still have a low, high, lower low. That was a breaker we were observing until it closed this doji candle and then accelerated back above up to this level. This whole range, this whole down movement, if price was to close there and then accelerate aggressively, that's still a bearish breaker. Okay, so if we can get down below this level again, we can rest assured that we're going to have a really, really aggressive decline. Who knows? CPI is going to determine which side we're going to break out of, I'm sure. I'm fairly confident that CPI is a strong enough news event, along with NFP, FOMC, PPI too. It's pretty strong. Rate announcements. All these things are strong enough to get you out of a consolidation. So it's ironic that they're holding up until what happens this week. So it's going to give us a determining factor in terms of which side should break out and which side should not be trustworthy. And again, we can go out on a limb and assume that all the other assets are showing us what they're showing us, which is basically promoting that this is going to go lower, right? All the indices look like they're trying to go lower if you're looking at the intermarket relationships. So if that's what we see, there's heavy manipulation happening because this thing is going against what its intermarket relationships should be affording it to do. When you see that crack in correlation, there's an underlying manipulation, or if there's a catalyst that's showing lots of strength in a lot of the interest for the stock market to go higher, like if there's fundamental drivers that are sincerely like really pushing the market, and you obviously have a crack in correlation, you still would support what this is doing. But you would keep in mind that at any moment they could flip the switch. Like right now, at any moment, they could flip the switch. Currencies, if they keep going lower, dollar, if it keeps going higher, the bonds and yields promoting this going lower and higher dollar, right? All of that stuff happening, at some point, they'll flip the switch for the indices and it'll snap in line. So that's always a risk. So we got to keep that in mind, you guys, okay? So my opinion is 50-50 for where I think this is going to go overall. If we were to go out on a limb, I would say because all the other assets are pointing towards currencies dropping, dollar going higher and this going lower, showing the yields going higher and the bonds going lower as well, I will assume that this will eventually try to get down and go lower, but we need a catalyst to trigger that. Otherwise, you know, if this just continues and we can't hold a level like this and we break above this, then again, we really have no reason to force our will on the market and try to see it go lower if the chart's not showing it. But for now, we're going to keep in mind the equilibrium. Keep in mind this order block here. Okay. we'll keep in mind this little gap in here. That's a new week opening gap, but again, the new week opening gap is not only a new week opening gap, it's also a fair value gap. It's actually a suspension block. Actually, I think I have that in... I think I have it in one of my markups. Maybe not. Yeah, maybe not. We'll see. We'll see what happens. So as long as it stays above this, if we can get above this high here, that'll be an inverted level that should have been a breaker. So it's an invalid part of the breaker that should turn to inversion. And if we can go from that to price staying above here, staying above this, continuing to show wick rejections from these lower levels, then we should be able to see it tag this. If it tags this while we stay above the equilibrium point and don't come back, this high to that low, breaking above this high becomes a bullish breaker. In that case, in order for us to go lower again, it's going to have to break through this candle's lower portion. Okay? Because again, this high, low, higher high, that'd be a breaker, bullish, when it returns into it. Something like this. But if that was to go like this and then decline instead and get below that level and below this level, that would be enough for me to then start to consider this this low again. But for now, we got our perspective on this, right? Like that's there, but we have to break back through these levels. We got to get down below this gap. We have to get down back below this level and close below it. We got to get down inside this range again and have no closure outside of this high. Because again, once it closes outside of that, this now becomes an inversion level. It's also an up wick. And the invalidation of the bearish breaker, which is down here, to then triggering in a inverted breaker idea, coupled with a bullish order block. Okay. And then, of course, when it comes to the Dow, we're going to have to respect this and go lower if we're going to continue to drop. We do got relative equal lows here. But we also have this gap. Okay. So if this gets outside of the gap, comes back down, or maybe it drops down first, then goes up and then comes down, right, we may be looking to target those upper levels. We got a rejection block in here, plus the wick, 50%, and then the high. So there's a couple targets up there to look at for the Dow. On this drop, I wanted to see if we couldn't get it to magnetize. I do still want to confirm before I look to go bearish. I want to confirm this fair value gap holding by respecting, breaking down. Breaking down below this will create a double change in state of delivery after a shift in market structure, which is right there, which is after a stop run. And basically us trading really aggressively through this wick. That's going to be significant too, okay? But if it stays above the midpoint, the upper 75%, which is where we're at, say it comes down slightly and then accelerates through this gap, again, it's just going to keep going higher. Okay, and then of course we got the S&P. We got a breaker already forming in this S&P chart. Okay. Honestly, I would just take the up candle there. For the breaker here, what I would like to see being sensitive is that upper level right there. And if that continues, then again, we got high here. Oh, I think we'll mark this off actually. Oh, it already hit it. That's a rejection block. So this target from last week was the rejection block from inside this swing high. Why is it a rejection block? It's got equal bodies. We got one large wick in the middle, failure swing, showing you the rejection. Equal bodies present you with the rejection block PD array. So when it comes back up into it, whether it's this candle or something that happens later in the future that price uses to push into it, that's going to be a sensitive level. And once it breaks through it and then comes back, if it doesn't respect it and go lower, and we break through it and come back, it's used as support or an inverted PD array. Similar to how order blocks, when they get traded through on the right side in a market maker buy model, they should be looked at as accumulation turned distribution, or order block bearish turned inversion going to the buy side, and vice versa. It's going to the sell side. It's the same thing. Okay. So again, I hope all this stuff makes sense. Hopefully you guys are clear on my perspective and what I'm looking to see price do this week. Some of the risks, some of the levels of contingency, excuse me, and what we will do if certain things unfold, okay? Again, keep very, very close eye on this equilibrium. Whenever price breaks out of a consolidation, it's going to break from equilibrium. Take note, go back and study consolidations. Find any consolidation on any time frame. I don't care which one you use. Look at what happened. Look at what happened, where it happened when price breaks out of a consolidation. Go look at where it starts. Where's the initial beginning stage that decided, okay, we're leaving this consolidation? Go look at that equilibrium point of any consolidation and see how many times when price breaks out of a consolidation, the origin of that run that gets you out of that consolidation starts at the equilibrium. Go see how many times that happens. That's a little gem for you guys to go study, and something for you guys that have been sticking with me this long. Go study that and then get back to me. Any of you guys that do the study, hit me up on Instagram, or if you're in my private group or in the free Discord, just send me a DM. Say, I studied this and this is what I discovered. And I'll be waiting for the "you were right" text. No, but seriously, go. I want you guys to go do that research, because it's highly influential, highly effective, very, very helpful. And it would not be a surprise if this is when, on a CPI week at equilibrium, if this is when price decides to get up out of this consolidation. Again, whether it's going to go higher or lower, we're going to have to wait and see. Or if I was going to go out on a limb, use the other assets to help try to determine what this is going to do, it should end up eventually going lower, assuming that all the assets that we looked at today do what we anticipate that they're going to do. All right. So yeah, that's my opinion for the indices. Again, we're just hanging at equilibrium. So again, I hope everything makes sense. Let me know if you guys have any questions. But with that being said, that finishes the indices. So let's actually go to gold real quick. Got a couple of recommendations. Looks like Microsoft may, in fact, offer what it is that I'm trying to see it do for an options play. Breaker. Should beautifully slide through that. We'll see. Again, AI is cooling off. So these declines we're seeing, they're pretty vicious. If people didn't take profit, yeah, you're probably punching the air. Some stuff is really, really dropping. So it'll recover at some point, but it may take a while. So yeah, let's go to gold real quick. Yeah, again, we did analysis on gold last week. Honestly, I don't really see anything's changed at all. I see really nothing has changed whatsoever. I still believe what I believed from last week, which is if this is going to hold and the assets are doing what they're doing from the bonds yields, indices and currencies and dollars going higher, we should still be able to see this continue to drop, at least until it takes out something like this. We do got SMT between gold and silver, so that's something to keep in mind. But we have this low to that high. We have the, can't remember what that was. What was that? Oh, that makes sense. We basically balanced out this level, and now we've pushed away. So I'm curious to see how this is going to continue to hold in here. The large wick is pretty interesting. This one's real interesting. This thing is huge. It's freaking giant. Large wick. Everything is continuing to just keep going lower. And again, all the other assets, if I was to go out on a limb, because those other assets are supporting price continuing to go lower in some of these assets, opposed to the dollar, and dollar's going to run up to that monthly fair value gap, we should continue to see this stuff continue to drop. And again, I put this red line up there. I think this is... it's going to be a sell invalidation if we can get above that. Well, why, right? Because we have a swing high, wick, midpoint, should act as a balanced price range in the lower 25. We're still hanging around in that lower 25%. That has me convinced the price is still looking to potentially take this lower. We also got a nice failure swing in here. But we'll see, right? Gold is highly manipulated these days because wartime. Countries are buying gold. This is not going to be going lower like this forever. There's just not enough gold supply in the world to fulfill what it is that took place. And this is just heavily manipulated. Anything that happens against the dollar, anything that happens damn near negatively about the US and our economy, gold is so highly manipulated off of uncertainty. And it's looked at as a safe haven because that's what it is. It keeps value. So in countries, lots of countries are overwhelmingly buying gold right now. They have been for 5 years. So gold reserves for almost every country are to the max that they've ever been. So, yeah. So I'll keep my belief that I'm of the opinion that this wick, this swing high, all should stay intact up to the 50%. And this little gap in here is going to be part of the catalyst as long as we stay closing below it for price to keep going lower. If this high here breaks, we have a wick, gap, and a swing high that's violated. And then that may be a moment in time where price starts its continuation to the upside. You see this wick right here? I did this on a bigger observation, but I did this a while back. I did this back in February when price was trading up into that. If you guys remember, especially you, Tony, because I know you were here and we talked about this. I talked about if this wick here closes below the midpoint and price gives us a change in state, we're probably going to look to target the trendline liquidity and dig really, really aggressively lower. And what do you know? It respected that level and never came back. It's fascinating stuff. It really is. But again, that's going to be my opinion on gold and all these assets. So we covered a lot today. We talked about a lot of psychology stuff, risk management stuff, just a lot of different things. Prop firm management, having the right perspective, how important a buffer is. Tony said, you called it and marked that way before it happened. Damn right, Tony. I'm about to be saying the same thing about you as well. Very soon, if not already. I just send over some markups. See what's going on, brother. I appreciate you, bro. XRP. Let's go back and look at XRP real quick. It's looking pretty nice. Looking pretty nice. Hey, for me, this is not terrifying. You say I have a limit, an alert right there, because I'm going to look to buy. Look to load the boat up some more. I believe in XRP. Some people might not, but I believe in XRP. I know too much. I mean, I've seen what the government is doing, how it's utilizing Ripple, the partnerships that are present. I'm not going to get into a whole sell about XRP, but man, oh man, oh man, mark my words. The battles we face in XRP are only temporary. Mark my words. But yeah, all of this is just simply rebalancing an inefficiency from that monthly perspective. All inefficiency. I preferred to see, given all the hype and stuff that was happening, us to stay above the 50% level here. But honestly, go lower. Go to 50 cents. Get down in here. Can you imagine all the people that are weak hands that are hanging out below here? Can you imagine all these people down below these levels? Can you imagine the liquidity that's down there if they haven't left already? Can you imagine if you were a bank looking to load up on an asset as good as Ripple XRP and you get it at 50 cents, 30 cents? I mean, man, they're frothing at the mouth, salivating. And all these banks are talking about XRP, XLM, you know, how they need to have this cross-border payment frictionless technology. And they've even admitted they've tried to replicate it, but they're not able to do it the way XRP has. They're just, it's a one-of-a-kind patented technology that was specifically made to revolutionize the way that value transfer is done in a frictionless and almost instantaneous manner. I'm telling you guys, you need to pay attention to what's happening. Japan is also very close to Ripple, right? Japan's banks are already issuing Ripple as a reward to their customers. You know how you get cash back? The bank's cards that they offer, like debit cards or credit cards that you get through a bank. In Japan, the official banks, the biggest banks in the country, who our country borrows money from, by the way, is now implementing Ripple XRP. They're screaming at the rooftops that XRP cannot be a cheap asset for it to do what they need it to do. It's coming out of their mouths. It's not just Joe Schmo on X saying, oh, it's going to the moon just because I like meme coins. These are like big players utilizing the fear in here, making all these people that have weak hands run away while they're screaming at the rooftops. They're looking this way because the chart is looking very terrifying for people that are in to get rich quick, while they're screaming the other way saying, we're implementing this. I mean, they just tokenized the stock market, or began the process of tokenizing the stock market with the company Stellar. Their crypto technology is called XLM. They're a sister company to XRP. Like, Dogecoin ain't doing this type of stuff. Whatever these cryptocurrencies claim they're trying to improve upon when it comes to utility, they're not making moves like this every single week with thousands of partnerships. If this was going to zero, there wouldn't be as many partnerships with Ripple looking to adopt their XRP technology. You think that big banks would be giving this company billions of dollars investing in their infrastructure if it was going to go to zero and be useless and was a meme coin? I mean, they have two brain cells to rub together. Clearly, that's not the case. Clearly, it's not going to go to zero. So I'm telling you, just something to look out for, okay? I saw a recommendation for crude oil. If I was you, I wouldn't even touch crude oil unless you have $20,000 per contract to spend. But, you know, I guess it's, you know, if it's for like fun, just to observe crude oil, I would highly recommend that you don't even consider touching it on anything unless you, I mean, it's $20,000 a contract that's required leverage. That's insane. Oh wait, whoops, where did it go? One of my mentors actually trades crude oil. He's obsessed with it. Joe Miller, I talk about him sometimes. His Telegram, he has a free Telegram. He used to call it ICT flashcards, like where he would basically have a Telegram where he was just giving out markups, breaking things down and all that. But man, am I glad that he decided to help teach people. He is an absolute gem. Absolute gem. Yeah, it's incredible. Some of these people that have helped me along the way. Just when I think about it, it's incredible. I'm trying to be able to do that same thing because I'm so appreciative of all the help that I got from certain people that it inspired me when I didn't ever want to come out and teach anything to go ahead and start thinking like, all right, well, I'm going to give my time to people. I'm going to share. I'm going to pass this blessing along instead of being selfish with it. They inspired me to come out and do this. So I hope you guys get value. If you do appreciate it, don't forget to like the video, subscribe to the channel. But once we look at crude oil right now, we're going to go ahead and call it a day because we're about to breach 3 hours again. Is this the new norm? 3 hours? Sheesh. You know, we just have too much fun on these calls. You know, it's the way it is. So yeah, if we go to the weekly chart, I think I'm going to just look at this real quick. So yeah, we got this breakdown. The Iran war being triggered, you can automatically know that that is a bullish sentiment because the Strait of Hormuz, unless something dramatic has happened to stimulate the amount of oil that's on the market at any given moment, given the fact that I think 20% of it is held up in the strait when it's closed, unless there's a way to mitigate the 20% oil issue, which I think is the reason why Trump attacked certain like Venezuela. I think that's why he went Venezuela first, then Iran, because Venezuela has the biggest oil reserves on the planet, and he knows that if he had to deal with Iran and remove them as a threat, he would need to have some type of way to mitigate the oil damage if they were to close the strait. So he somewhat has that, not at full throttle yet in Venezuela, not only for the world, but for the United States as well. But these things are commodities, right? Even in good times, if they chose to manipulate stuff, you know, they always choose to do whatever they want. So yeah, crude oil runs really, really nicely. But it's very fundamentally driven. Same thing with gold. That's the risk behind commodities, but it's also the positive with commodities too. Because if you're part of the move that runs, I mean, it's going to be pretty spectacular. Something we can anticipate or identify here is this wick. Notice the midpoint was respected. We have a high, low, failure swing. This lower, we'll use it up to that wick right there. That lower level in there, once price left it and came back, if it came back at all, would have been something nice to look at as a mitigation block. Very sloppy with all the gaps, but we have a high, low, failure swing breakdown. High, low, failure swing breakdown. Okay. It's a mitigation block. Midpoint of the wick. Displacement. Clear gap. We had this outlined well in advance as well. It's pretty spectacular how it got all the way down there. I mentioned this a while back. Way up here. It's very interesting. We do got relative equal lows here. I wish it would come down to here because if it does, that means that oil prices are cheaper. It means gas is cheaper. But, you know, we live in a crazy world, right? I hope everyone's been doing okay, by the way. I know things are really, really expensive. All that'll change hopefully soon. But if it doesn't, it's another reason why trading is so life and death. At least that's why it was for me. I don't want to have to depend on an employer. Fuck working. Okay? Fuck these employers. Unless it's a good company with a good employer. Like if you work for like Amazon, like, or some jobs that just don't appreciate you. Do you really want to live your life dealing with that? Would you really quit trading because it's difficult or you're making mistakes? If that's where your mindset's at? If you hate your job, you can't wait to get off work. Right when you wake up, you can't wait to get off work. Like right when you wake up, you want to go back to bed. Right? If you're living in that and you have trading that can be an option to make it out, but it just requires you to do a lot of stuff you may have not been willing to do yet. While you hate your job, are you really going to accept that? Is it really a place you want to live at? And again, there's nothing against jobs, having a job. You need a job, right? A lot of people have jobs for very particular reasons. Maybe it's part of their identity, right? Maybe they just want extra money. Maybe they want to use a job for healthcare to make it simpler, because it's definitely more expensive, like double the price when you're working as a business owner, right? But it's 100% tax write-off though, from what I understand, right? So there's benefits and downsides, but again, jobs aren't entirely bad, especially if you leverage job, especially if you're doing something helpful and productive. Like if I didn't hate the culture in the construction business where like everyone's drinking all the time, all this BS, if I didn't hate that, I would have really no problem working those types of jobs. I already do side jobs because I already have that skill set. So I would much rather do that because you're still not appreciated. If you're building a $100,000 project and all you get is like $300-400 a day to do all the work yourself, and the company's making tens of thousands of dollars off your back, why not just go do it yourself? Become good at marketing, build a brand, get a social media page, market yourself, go on Angie's List or whatever app is available for you, where people post their availability to do certain tasks, certain jobs, with certain skill sets. There's another one called TaskRabbit as well over here in California. I mean, that's the thing, you know what I mean? Like trading, I love trading, you know? And honestly, if I didn't care about other people, right? Or if I just didn't have an interest to teach or just felt like too lazy, you know, there'd be nothing wrong with me just trading. But if you have other aspirations, if you have other passions and whatnot, you know, don't let trading be something that takes away from all that. If you love your job, don't let my opinion saying fuck working make you not like what it is that you do. We need people that work, you know, and if you love your job, it's not really work now, is it? If you get paid well, it's not really work. You're doing your passion, you know? So work is only work when it's miserable. Work is not worth suffering at for a long extended amount of time without learning something to get out of it, right? It's not worth working unless you're, well, it's not, how can I say it? It's not like, in my opinion, acceptable to work a job you hate and not have things that you're studying outside of it to escape that. We're not here on this planet to just work and crush ourselves every single day and then just die. We're not here to do that. We weren't placed here to do that. We're here to be productive. Praise God first and foremost. That's why we're here. You know, spread the word and whatnot. But we're here to make a difference. Even if it's a small difference. You know, that small difference can be a small difference to you, may be a big difference to someone else. So we're just here to do our part, whether that's teaching, whether that's construction, right? Or that's, doing anything else that you may be passionate about that helps others. Maybe you do hair. You know what I mean? Like, you're there helping serve people that want to look good. Maybe you're in the medical field, like my mom is. She loves it. She wouldn't quit even if I told her to. Like, I've tried, trust me. She don't want to. Paid her car off, though. That felt really good. Didn't think I was going to be able to when I first started, but those are things you could look forward to with this skill set. Live a more fulfilled life. Go ahead and support things that you truly care about, make a difference in the way that you truly want to make a difference, or support resources that are making the difference that you want to be a part of. Maybe it's with cancer research, right? Maybe it's with veterans who fought for the country who are disabled. Maybe it's helping other people get the capital to start their business. Maybe it's helping other people start businesses. Maybe it's helping your family. Maybe it's helping your future children, nieces, nephews, cousins, uncles, friends, maybe their family. Whatever the case may be, you want to make sure you think of these bigger things rather than just yourself. Because once you hit it for yourself, once you get to the goal yourself, for your own goals, you want to have something to keep going for. Because otherwise, life will become kind of dull. You can only spend money so much and do so many things. Eventually, that's why rich people a lot of times say money is not the only thing. You want to have a plan that you're looking for outside of making money. Expect that you're already going to make money. You're already going to get there, right? You're going to hit your goal. There's not a doubt in your mind. Expect it. Tell yourself every day, I'm expecting this, so I need to make plans. That's the surest way to prove to yourself subconsciously that you expect to be successful. Make plans for what you're going to do once you hit success. Imagine you've spent all the money in the world that you could have ever spent. You've done everything you've ever wanted to do. What's next? What's next? And I'm sure you'll be able to find something deeper that you're doing this for. And that'll help reinforce your why. It'll help make quitting non-negotiable. I will never quit. I'm going to have to either have this stripped from my bare hands, become disabled to the point where I can't even see the chart, or just die before I look to quit. Nothing will stop me. Even if I started from zero again, I would get 4 jobs if I needed to get enough capital to put in a personal account. I'd be leveraging these funded accounts just the same way that I did when I first started coming up. I'd do it all over again, gladly, with even less hesitation. I already had very little hesitation. But know what I know now? Man, there would be not even a thought of hesitation. There rarely was ever in me doing this. Once I clicked buttons and made money for the first time, even though I lost like thousands of dollars at first, once I clicked and saw $500 was made in an hour and a half, that was it. I was in drawdown, losing my ass before that. But that one win, I was like, oh, okay. Yeah, I'm going to do this more. Okay. I'm going to get to the point where this is what I do consistently. It's going to happen. And then ICT came into the picture, and then my 2 other mentors came into the picture, and the rest is history. And now my family gets to reap the benefits. My daughter's going to learn how to do this. Hopefully she's interested. I got to figure out a way to make it fun. Really, really fun. I'm already trying to show her a candlestick chart and teaching her about assets and liabilities. She's only 6 years old. She's already becoming financially literate. And, that's more than I ever could have asked for. She has the right mindset. I had to make sure I had the right mindset though, because if I had my child 10 years ago, before I started trading, when I was in the heat of chaos in my life, heat of lowest of the low, I wouldn't have been able to share what I'm able to share now or pass on the mindset that I have now. I was just not the same person. So she wouldn't have got the same advice. That's the beauty in life, though, right? You live and you learn, you grow, and you become better. So yeah, with crude oil, just so I can bring this call to a close for you guys. We'll see what happens with the geopolitics. I'm honestly not sure. If we're going to go off of what the chart is showing, then we should end up seeing this continue to collapse. But we need the Hormuz Strait opened up. If it stays open and things don't escalate much further than they already are, I mean, today we're going to see a huge gap. I wouldn't be surprised if it gaps 500 points to the buy side because of all the bombing and chaos that's happening the last couple of days in Iran. I mean, we bombed the hell out of them for 2 straight days since Friday night when the markets closed all day yesterday. It was just nonstop notifications, bombing, blowing up so many things. So I don't know what that's going to do. We're going to find out though. But I'm expecting potential gaps up, maybe back into this little gap. What I do notice is this little piece right here. It's a liquidity void. Okay. So that right there is definitely it's a liquidity void. So I definitely got my attention there. That's an inefficient piece of price delivery. We've been talking about these types of things a lot recently, liquidity voids and whatnot. Got this large wick, but that's not enough, right? This right here is inefficient. It's going to most likely look to come back up into that. And then we'll see what it wants to do. We do got equal lows here as well. Relatively equal. Trendline liquidity. So we may eventually see that get taken. We've got a lot of stuff down here too. I wouldn't be surprised. Go ahead and get that looked at. Yeah, so this gap down here, if this respects this and we do start to continue to smash lower, seems like it's just retracing into here, balancing out this inefficiency. It's kind of accumulating. But if we do get that displacement and we break this low and we continue to race lower, these are my levels of liquidity, right? That level, the trendline liquidity, equal lows, and then eventually this little gap in here for the next couple of weeks. We'll see what happens. It could very easily come back up into this and hang around because Hormuz Strait being closed, it's not the greatest thing for the oil market. They're not fully adapted yet to have a market, an oil market where there's no Iran Hormuz Strait. Eventually there will be really no need to worry about it with Venezuela and all that. The roles are going to change. Things are going to change. The volatility in Iran is not going to be appreciated by most countries. If Venezuela can pump it out, they have enough oil to last, 10 generations for the whole entire world. They have the largest reserve. So the roles may switch from Middle East oil production and supply to the Western Hemisphere, right? Providing most of the world's oil. And can you imagine what Venezuela is going to look like from that without a communist and massively unleashed oil reserves partnered with the United States? Venezuela is going to become Dubai of Latin America. And I cannot wait to visit. But I ain't visiting right now. Trust and believe that. Okay, so that's my opinion for everything. Hopefully, you guys have made sense of everything. Again, I appreciate you guys spending so much time with me. You guys could be anywhere on a Sunday, but you're here with me for literally almost 3.5 hours, listening to me talk, having dialogue, sharing your thoughts, your opinions, your successes. And I couldn't be more grateful to have you guys here. And I appreciate it. I don't take it for granted. So hopefully you feel I've given you guys value. You walk away from today with more experience, more understanding, more clarity as you look to continue on this path towards consistency, and clarity and price action that you're reading. All right. So again, if you guys got any questions, let me know. This week is our marathon of live trading. We're going to be live for basically today, Tuesday, Wednesday, and then Thursday. So the most active days of the week, we're going to be live publicly, showcasing how we navigate these things and how consistent this stuff is and how you can go about doing it as well. All right. So again, if you guys got any questions, let me know. Don't forget to like the video on the way out. Subscribe to the channel if you haven't already. And yeah, I guess I'll see you guys on Tuesday. At 5 a.m. We'll be live at 5. I got to go change the time. But we'll be live at 5 a.m., okay? So yeah, that being said, God bless you guys. Thanks again. And I will catch you beautiful people bright and early on Tuesday. All right, have a good rest of your weekend.